No company wants...
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the terminal can take your workflow to the next level at bloomberg.com/professional.
To be involved in an international dispute. But when disagreements arise, you need expertise at your side. Take a closer look at ICDR, the International Center for Dispute Resolution. Backed by the longevity and strength of the American Arbitration Association, the ICDR is the world's leading provider of cross-border dispute resolution services, handling more cases than any other institution. Find out why global expertise matters. Visit ICDR.org.
NJIT makes the workforce of the future, and Greg Sauter, a member of NJIT's Board of Overseers and president of engineering firm WGI, says NJIT graduates have the in-demand skills that drive today's tech-powered workplace.
Our world is moving to a place of connecting the physical with the digital. In the field of engineering and infrastructure, there's not a thing that we do that's not being changed by technology. We've gone from two-dimensional renderings to immersive, augmented, and virtual reality. Solution sets used to be solved one at a time. Now we can run nearly an endless alternatives analysis and optimize the output, and how we construct that future, from autonomous equipment to 3 and 4D printing. NJIT students graduate with that critical understanding of the cyber-physical world and how we move between them, but with that all-important grounding in applied STEM principles.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Broadcasting 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
This is Bloomberg Daybreak Europe for this Thursday, the 14th of October in London. Coming up this hour, price pressures. China sees the highest factory inflation in 26 years after US CPI prints above 5% again. Fed minutes suggest tapering as soon as next month. Earnings season ramps up. Bank of America, Morgan Stanley and Citigroup report later. TSMC reports quarterly profits that beat expectations as margins recover.
The UK and EU discussed the Northern Ireland Protocol after concessions in a bid to cool Brexit tensions, and a plan to increase face-to-face GP appointments post-pandemic in England. I'm Leanne Gerrans with World News.
Plus, the revenge of value trading. We'll be speaking to Rob Arnott, who is the chairman and founder of research affiliates about market bubbles and the revival of cheaper stocks.
That's all straight ahead on Bloomberg Daybreak Europe, on DAB Digital Radio London, Bloomberg 1130 New York, Bloomberg 99.1 Washington DC, Bloomberg 1061 Boston, Bloomberg 960 San Francisco, Sirius XM Channel 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Good morning from London. I'm Caroline Hepker. Well, welcome to Bloomberg Daybreak Europe. And for the next couple of hours, I'm joined by Danny Berger. Good morning, Danny.
Good morning, Caroline. Yeah, what an exciting day after some CPI and some Fed minutes. A lot of Fed and macro to get through today.
Yeah, absolutely. And also I noticed this start of the cajoling of the Chancellor here in the UK for what he should be doing in his budget. Anyway, we'll get into that in a moment. Let's go to the data then for you. So yes, this kind of very high number of PPI, 10.7% in China. So producer prices skyrocketing, but Chinese stocks not that concerned about it. CSI 300 is actually down 0.3%. More broadly in Asia, the MSCI Asia Pacific Index gains 0.5%. Nikkei 225 up 1.5% too. Futures for both the US and European opens have been fairly positive. We're up 0.5% for US stocks 50 futures and 0.4% for S&P 500 E-mini futures. As for the bond markets, on the 10-year, we trade still well below 1.6%, 1.55% for US yield, so up by a basis point. On the long bond, we're at 2.06%, and on the 2-year, after those Fed minutes and the CPI number at 35 basis points. We're also tracking the metals story for you, as that on at least the London Metal Exchange Index is on the cusp of an all-time high, so measuring the 6 main base metals metals. Gold dips, though, from, well, close to a month high, $1,791, and WTI crude futures at $81.09. So that up by 0.8%. And that's a look at the markets right now.
All right, let's get some of our top stories today. And we start here in the UK. We have trade associations and business leaders backing calls for an urgent review to business rates. Bloomberg's Ewan Potts reports.
The CBI and 41 other organisations have written to Chancellor Rishi Sunak to say that companies should be exempt from business rates for investments in emissions-reducing machinery. The groups argue the current system actively discourages business investment in decarbonisation. In the statement, they say that a reform could help boost investment in green initiatives. But the Telegraph reports Sunak is unlikely to make major changes in his upcoming budget due in less than 2 weeks' time. In London, I'm Ewan Potts, Bloomberg Daybreak Europe.
Meanwhile, more difficulties for the British energy market. Glencore-backed UK gas supplier CNG Group announced that it will no longer provide gas to its utility clients. CNG supplies wholesale gas to utilities who then sell it to households. The move could push more retail suppliers out of business. Pure Planet, which is backed by BP, and Colorado Energy announced that they were closing on Wednesday.
I also noticed there was a zinc plant which is going to cut their production in half in Europe. And because of that, zinc is at a 3-year record. Every day it's a new obscure commodity.
Yeah, absolutely. And it's all
crisis.
connected, isn't it?
Exactly. It certainly is. Well, we also had data out this morning. It was China's factory gate inflation soaring in September to the highest level since 1995. Bloomberg's Brian Curtis has more on this story.
PPI jumped 10.7%, stoked by a nationwide energy crisis and spiking coal prices. The reading was higher than the 9.5% gain in August, and it exceeded the 10.5% estimate. Now, consumer prices were held in check by falling pork prices. The CPI was up 0.7% last month from a year earlier, slightly lower than the estimate. Now, China's move to cut energy consumption has led to an electricity shortage, and as a result, we've seen factory production halts in more than 20 provinces. I'm Brian Curtis, Bloomberg Daybreak. I'm Brian Curtis, Bloomberg Daybreak Europe. I'm Brian Curtis, Bloomberg Radio.
Okay, so that's Brian Curtis. Let's get a bit more on the inflation data then, shall we, for China. So Tom Hancock from our China economy team joins us again this morning. Tom, you explained to me a bit earlier also why these high producer prices are coming in. Just what's behind it?
So it's a clash of still quite high demand for raw materials, from metals to chemicals, and then a supply decline driven by the electricity shortages that you've mentioned, and also the environmental measures China is taking.
So that's on the producer price inflation side. Tom, why haven't we seen a pass-through to consumer prices?
Yeah, well, there's a number of factors. Pork, as you mentioned earlier, is a downward leading force on the CPI. And then we're also seeing just generally consumer spending in China remains weak, and companies have a lot of pricing power.
Okay, so the implications then for global inflation, obviously key.
Yeah, I mean, we've seen inflation higher than normal in markets around the world, and so people are asking, given China is such a major exporter, will this then add up to more inflation overseas? What we're hearing is that the impact from China will be quite limited, and that's because, firstly, exporters also don't have much market power to raise prices, but also because overseas inflation, consumer inflation, is mainly driven by services and domestic factors, and the Chinese influence on that is quite small.
All right, Tom, thank you so much. That is Tom Hancock from our China economy team. Caroline.
Yeah, and speaking of which, a bit more inflation data, because in the US today, the government issues the producer price index there. Economists are forecasting a September increase of 0.6%. That would be the 11th consecutive monthly gain.
And as we were saying, just a lot coming out of the US yesterday, a lot alongside inflation data out later today. We also have the release of the Federal Reserve minutes yesterday of last month's meeting on monetary policy, and the committee is sticking to the taper timeline. Bloomberg's Vinny Del Giudice reports.
The minutes show Fed officials agree they should start tapering emergency economic support in November or December. That $100 billion in monthly asset purchases. but with a catch. The U.S. economic recovery from the pandemic remains on track. There have been signs of a pullback. Central bankers next meet at the beginning of November. Vinny Del Giudice, Bloomberg Radio.
Meanwhile, the ex-Treasury Chief Larry Summers has had some critical words for the Fed. He says that global policymakers are paying too much attention to social issues and not enough to the biggest risk to inflation since the 1970s.
We have a generation of central bankers who are defining themselves by their wokeness. They're defining themselves as by how socially concerned they are. They've grown up and had their whole experience shaped by a period when inflation was below target. And so it's very hard to lose old habits.
So Larry Summers, well, he went on to talk about US inflation, which jumped to 5.4% last month, and that it could spin out of control. Also that the UK is even further behind the curve.
Well, staying with that central bank news, we have turmoil once again in Turkey. The lira sliding to another record low, continued volatility for the currency after President Erdogan fired 3 central bankers in a midnight decree. Bloomberg's Simin Demokin reports from Istanbul.
The changes follow a meeting between Erdogan and Central Bank Governor Sharp Kavcıoğlu. According to people familiar with the composition of the committee, the changes rid the committee of members who disagreed with Erdogan's calls to continue cutting interest rates. Last month, the central bank surprisingly lowered the benchmark interest rate by 100 basis points to 18%, despite accelerating inflation. In Istanbul, Simin Demirkan, Bloomberg Daybreak Europe.
And let's get to some earnings news this morning. Taiwan Semiconductor Manufacturing Company's quarterly profit beat expectations. That's as demand for TSMC's chips stayed robust in the face of worsening hiccups in terms of the supply chain. The world's #1 chip maker said that Thursday net income for the 3 months ending in September rose 14%.
And we also had some breaking news just crossing the terminal only moments ago. Fast Retailing, that's of course the Uniqlo parent, seeing their full year operating income missing estimates. It came in at 270 billion yen. The estimate was for over 300 billion yen. I should say there's been some extensive underperformance from Fast Retailing this year, so that certainly will not help. Their operating profit down about 7.8% year over year.
OK, so that breaking on the Bloomberg terminal. Right, let's get over to Bloomberg's Leanne Gerrans, who's got the latest in world news. And it's another Brexit headache. Good morning, Leanne.
Yes, indeed, Caroline. The talks don't seem to end, do they? Now the EU and UK are braced for a new round of negotiations in London over the coming days over trade barriers in Northern Ireland. That is after Brussels unveiled a set of proposed adjustments to the trade protocol that would slash customs checks into the territory by half and cut sanitary inspections on mainly retail goods by 80%. European Commission Vice President Maroš Šefčovič says their priorities are clear.
Our #1 priority remains to ensure that the hard-earned gains of the Good Friday Belfast Agreement, I'm talking about peace and stability, are protected while avoiding a hard border on the island of Ireland.
Meanwhile, the British say the existing arrangements are unworkable. In England, GP surgeries that do not offer enough face-to-face appointments will be unable to access new funding under plans announced this morning. It is part of a new package of measures to improve services and is being backed by £250 million. Those that fall short will instead be given an improvement plan. In Norway, a number of crime scenes are being forensically examined after 5 people were killed in a series of bow and arrow attacks. Police have charged a 37-year-old Danish man. Carrie-Anne Strand is the town's mayor.
The council is in a state of readiness, which means that both the political and administrative leadership have been together for about an hour. We're trying to arrange care for those who need it. At the moment, the situation is a bit unclear, but we're following the events as they unfold.
The incident happened in Kongsberg, about 50 miles from Oslo. And the World Health Organization has proposed a new team to lead an investigation into the origins of the COVID-19 pandemic. The 26 proposed members of the group were selected from 700 applications and have expertise in a range of areas from epidemiology to biosecurity. A controversial joint WHO-China mission earlier this year found that the coronavirus probably spread from bats to humans via another animal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Danny.
Leanne, thanks so much. Now let's get to this morning's sport. Here's George Alderman.
New Watford manager Claudio Ranieri insists he still has plenty to offer as he approaches his 70th birthday. The Italian, who led Leicester to the Premier League title in 2016, will reach the milestone next week. He's been brought in to keep Watford in the top flight. Chelsea have their first win of the Women's Champions League group stages after claiming a 2-1 victory over Juventus last night. The result in Turin leaves last season's runners-up with 4 points from their opening 2 games. Arsenal look to bounce back from a 4-1 thrashing by Barcelona when they host Hoffenheim tonight.
Now, that was the Sports Report. Still ahead on Bloomberg Daybreak Europe. We're going to bring you our property portfolio segment this week, talking about the housing market here in the UK. The latest RICS survey shows the pressure on demand for homes. The CEO of Britain's biggest buying agent will be joining us next. That's Jonathan Hopper from Garrington. This is Bloomberg.
Burden LLP. The world's financial decision makers connect on the Bloomberg terminal, sharing ideas, negotiating trades, and forming an influential network that helps power global markets. Isn't it time you join them? Bloomberg.com/professional.
P Accountants and Advisors presents Tax Chat with Mark Boswick, managing partner and leader of Burden's Family Office Services practice.
Every family office is different and needs an advisor who takes the time to ask the right questions to develop a clear understanding of the goals and needs of the family. When choosing an advisor, it is important to select one that will invest the time to understand the desires of each family member, as well as the dynamics and economic realities facing the family as a whole. Burden does this, which enables us to offer a wide range of services, including daily bill pay, portfolio review, and complex tax planning to help preserve a family's wealth while making their lives easier. If you're a high net worth individual or head of a family office, let Burden help protect you, your family, and your business.
For more Tax Chat from Burden Accountants and Advisors, visit burdenllp.com. That's BERDONLLP.com. Burden Accountants and Advisors. We listen, we solve, we do.
When the market is unpredictable, BAM gives you certainty. In the face of market volatility and illiquidity, BAM insured municipal bonds deliver default protection, value preservation, and a durable AA rating from S&P. BAM's insurance protects against everything that causes a default, including natural disasters, financial fraud, pension issues, and economic disruption. So while America rebuilds, BAM has you covered. BAM. Build America Mutual. Talk to your investment advisor or visit buildamerica.com.
Know that feeling? Like every door is closing and you just can't see a way out? Being unemployed, underemployed, or just out of school can feel like that. But when you find the right tools, suddenly everything just clicks. FindSomethingNew.org offers resources that help develop new skills. Skills that can position you for careers in today's growing industries, from healthcare and manufacturing to cybersecurity and alternative energy. Find your path to a new career at FindSomethingNew.org. A message from the Ad Council.
Influential conversations from Bloomberg Television. Here's Anna Edwards.
Joining us now is Gareth Whitcomb, JP Morgan Asset Management Portfolio Manager. Gareth, very nice to speak to you this morning. Give us your thoughts on where the supply chain issues head from here, because we've just been discussing how there don't seem to be any brighter signs on the horizon. When you look at the fundamentals that are still putting us in this position, I thought things were supposed to improve as we all decided we'd buy services instead of stuff, and then the chip shortage would abate. I know we've got big structural changes going on around EV vehicles. I mean, what are the big things that you think are driving this and just aren't going to change and aren't going to provide any relief soon?
Well, if we look at it from a big picture perspective, we've had unprecedented stimulus from central banks and from authorities generally as we've been in this coronavirus crisis, and that's really meant that demand has been incredibly strong. At the same time, we've had this hugely disruptive event around coronavirus, which has meant that supply chains have been hugely disruptive. And I think we're still seeing, we're surprised at how long, we've been surprised at how long that has lasted. Certainly I'd agree with Mark, when you see Apple, one of the biggest companies or the biggest company in the world, talking about their inability to source chips, that's a major concern.
Hear more conversations like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app. Or check your local cable listings. Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in the City of London, I'm Max Ramsey with this Bloomberg Radio Business Flash. Global stocks and futures positive today. The MSCI Asia Pacific rises 0.6%, a little bit of weakness in China. CSI 300 down 0.4%. Of course, we did get inflation figures out of China, factory gate inflation, the highest since 1996. Also today, Japan closing strongly up around 1.5% on the Nikkei. So really not getting too bogged down by this raft of macro data points we've had, as well as Chinese inflation. We had US CPI holding above 5%, also Fed minutes from the September meeting, signaling a potential taper in mid-November or December. Right now, US futures are gaining up around 0.5% on S&P 500 E-mini futures, NASDAQ futures up 0.6%. We had a move lower in yields yesterday, just coming up a little bit today. The US 10-year yield rising 2 basis points, 155.43. The curve also steepening a little after we flattened yesterday, so just steepening about 3 basis points, the 530s curve. The dollar just weakening slightly on the Bloomberg Dollar Spot Index, but more or less flat. In terms of Europe, futures also to the upside. Euro Stoxx 50 futures up 0.6%. Similar move for FTSE 100 futures. And we are seeing strength in energy markets still. WTI gaining today up 0.9%, $81.13 per barrel. That was a Bloomberg Business Flash. Now let's get to Leanne Gerrans for more on what's going on around the world. Good morning, Leanne.
Max, good morning and thank you. The Chancellor Rishi Sunak is insisting the government is doing everything it can to make sure supply issues are fixed and says he's confident there will be enough Christmas presents to go around. Toy manufacturers have gone against ministers to encourage parents to shop early this year. Containers have been backed up at ports in recent days, and that is on top of a lack of lorry drivers. Now in Australia, Westpac has become the first of the big banks to mandate vaccines for its employees. The bank said it expects all workers entering a workplace in the eastern states of New South Wales, Victoria and the Australian Capital Territory to be fully vaccinated by the 1st of December. Meanwhile, staff in other parts of the country have until the 22nd of February. And Prince William is suggesting entrepreneurs should focus on saving Earth rather than engaging in space tourism. The Duke of Cambridge said great brains and minds should be trying to repair this planet, not trying to find the next place to go and live. William has been speaking to the BBC's newscast ahead of the first Earthshot Prize to reward those trying to save this planet. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Caroline.
Thank you so much, Leanne Gerrans, with the World News. Now, it's time for Property Portfolio. So buyers returned to the housing market in the UK last month and found that homes were increasingly in short supply. That's according to the latest survey from the Royal Institution of Chartered Surveyors. It suggests that even with the stamp duty holiday ending on the 30th of September, demand is being underpinned. A lack of properties, low borrowing costs and demand for properties away from urban centres. Well, joining us this morning is Jonathan Hopper, who is CEO of Garrington, which looks for properties for clients, if I understand it correctly. Jonathan, good morning.
Caroline, very good morning to you. Yes, we do.
So, your job must be quite a lot harder given just how few properties are for sale and high valuations.
Absolutely. It's certainly one of managing expectations at the moment. It's a tough market for sure, but there are opportunities and there's more going on in the market than maybe first meets the eye. We're seeing a lot more activity being done privately at the moment, a lot of discretionary sellers in the market. But nonetheless, it is a tricky market to navigate in terms of availability of stock and also what's happening next on prices.
In terms of those prices, and Jonathan, good morning to you. This is Danny in London. Are we seeing a scenario that we've seen in some of the other major global cities where we are seeing buyers being priced out of these markets?
I think that is the case in certain locations, and obviously city markets, particularly over the last 5-10 years, have had a very good run. Price-earnings ratios have soared, and therefore affordability in some of those city central locations has caused people to then look further afield and get more for their money. That trend's now been accelerated with what we've seen over the last year and a half, or actually the reality of being able to work from a remote location, maybe some of the week, not necessarily all of the week. It's almost been like a forced experiment, and that has then taken the cork out of the bottle, and we are seeing more of an outflow of equity from city markets into rural locations.
Okay. I mean, certainly in the UK, a lot of the southeast of England market is driven by overseas buyers. Are they coming back?
We are seeing the early signs, absolutely. I'm talking to colleagues both in London and the southeast over the last couple of days. There is definitely an uptick now that travel corridors are starting to open. The demand has been there, and the UK has always been of interest to international buyers, but it has been suppressed, obviously, with what's been going on. But there is definitely transactions starting to take place again that are being fueled by international buyers rather than domestic demand.
As we see, Jonathan, some of the withdrawal of furlough coming back, you have rising inflation. How long do these sky-high property prices last? Are we likely to see a collapse in some areas?
I think it's fair to say that the market is going to start splitting more over the coming sort of 12 months. What we've seen over the last 12 months is a fairly uniform trend. London's been held back, because it had a very good run. And as I mentioned, price-earnings ratios was already fairly high. London looked quite high already. Rural markets, particularly and outside of London, in some cases, there's sort of the P ratios are half of where they were. So they've enjoyed their time in the sunshine over the last 12 months. What I think we're going to see moving forward is sort of best-in-class type properties are still going to perform well. There's not enough of them to go around, and that lack of supply is underpinning values. But now we've got incentives like the stamp duty holiday that's ended. Lower, more mainstream ends of the market are going to calm down. At the moment, what we're seeing is a little bit like a half-drunk cappuccino. The froth has definitely come off the market, but it is still hot.
Okay, Jonathan, very interesting. Thanks so much for joining us. Jonathan Hopper is CEO of Garrington, which looks for properties for clients. And this, of course, as we had those RICS, the house price survey, sort of very closely watched in the UK, out overnight, saying that, basically, the property market in the UK is still hot.
Yeah, definitely. A lot of buyers looking for not a lot of properties. Well, coming up, Caroline, very excited for a conversation we have coming up. We're going to tackle that age-old debate, value versus growth, cheap stocks versus tech versus expensive stocks. We're going to talk to Rob Arnott, chairman and founder of Research Affiliates. This is Bloomberg.
This is a Bloomberg Money Minute. Inflation worries remain front and center on Wall Street, and the latest report on retail prices did little to ease those concerns. Prices rose 5.4% in September from a year ago, the most since 2008. We'll see today if there's more inflation in the pipeline as the government reports on September wholesale prices. They're expected to show an 8.7% surge versus last year. Upward pressure on food prices could be easing. New government data show U.S. corn and soybean crops did better than expected despite bad growing weather. Corn futures fell to a 4-week low yesterday. Soybeans hit a nearly 10-month low. A taste of New York is coming to Tokyo. The famed Peter Luger Steakhouse today opens its doors to its first location outside New York. The red brick building that houses the restaurant is reminiscent of the family-run Brooklyn eatery that first opened in 1887. Larry Kofsky, Bloomberg Radio.
Introducing Bloomberg Quick Take. Our global stories take on tomorrow today. Watch live news on the events changing your business and your world. And go deeper with original shows on business, technology, politics, and culture. Don't settle for a news network built for yesterday. For a global view and an informed take, Bloomberg Quick Take. Now streaming free on Bloomberg.com/quicktake. Brought to you by Accenture, American Express, and AT&T Business.
At Commonwealth Financial Network, our journey began with a single purpose: to give independent financial advisors the freedom to do business their way. Today, our mission has evolved to supporting more than 2,000 small business owners who serve nearly 500,000 families and individuals. Real people with real goals and dreams on the path to financial independence. Where will your journey take you? Visit us at commonwealth.com. Commonwealth Financial Network. Member FINRECIPIC, a registered investment advisor.
President of the Jewish Communal Fund, Zoya Rains, and her husband Robert Friedman, Jewish activists and philanthropists, talk about why they chose the Jewish Communal Fund for their charitable giving.
As very busy working parents, we wanted to focus more on the charity part of it and wanted to focus more on our children and less on the administration.
The Jewish Communal Fund is one of the oldest and largest donor-advised funds, but at the same time, they're totally up to date and have state-of-the-art systems for us to access and manage our contributions online. The assets in our fund at the JCF grow tax-free, so we can generate more charitable dollars to support the charities that we care about most.
Let JCF minimize your taxes and maximize your charitable giving.
We're incredibly passionate about our charity, and the JCF allows us to focus more on the charity and less on the administration and the headaches.
For more information about Jewish Communal Fund, visit our website at jcfny.org and request a new fund kit.
I spend a lot of time in the garage, but even more time in the rain, sleet, and mud. In 95, I helped tow your moving trailer. In 05, I helped you get out of a ditch. Yeah, I know I'm a bit rusty, and sadly in 09, it was sparks from me, your handy chains, dragging behind your truck that accidentally started a wildfire.
Sparks from dragging chains can start a wildfire. Spark a change, not a wildfire. Visit SmokeyBear.com. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Only you can prevent wildfires.
Where are today's real testing grounds for the latest innovation? Places where advancements in health, transportation, and business happen every day. Cities. Today, cities lead the way, taking local solves and turning them into global solutions. Now, introducing Bloomberg City Lab, a new platform covering the present and future of global cities. Learn more at bloomberg.com/citylab. Brought to you in partnership with Hyundai.
When we say Bloomberg brings you the latest financial and business news anywhere, we've actually given the matter quite a bit of thought.
Let's get now to our guest joining us from Bangkok. She joins us on the phone from the Hudson Valley.
Bloomberg Radio. Bloomberg. The world is listening.
Broadcasting live to London on DAB Digital Radio. To New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak Europe.
And it's 7:30 a.m. here in London. A very good morning. I'm Caroline Hepker.
And I'm Danny Berger. You're listening to Bloomberg Daybreak Europe live from London. Caroline, it's a positive day in these markets. I mean, it's been back and forth a lot over the past few weeks, but we were able to snap a losing streak in the U.S. So let me quickly get you to your data. So we're looking at S&P futures that are up about 0.5%. Same goes for European futures as well. We're about 30 minutes away here from your cash equity trading. Now, bond market, a little bit of a reversal from yesterday. We are seeing a steeper yield curve. Yesterday was notable for a flattening of the yield curve after stronger CPI data and a hawkish Fed. The so-called Greenspan conundrum is back, but today it's about a rise on the long end, about 4 basis points on your 30-year yield and 2 basis points on your 10-year yield. Your 10-year yield trading at 156.30. So your 2-year moving lower. We have that very voracious appetite on the 30-year auction yesterday. Now, in the metal space, we're looking at WTI crude above $81 a barrel. Brent is above 83, nearing on 84. So both of those moving higher. And in general, just the metal space picking up some steam today. LME copper moving higher by 2%. LME zinc also trading at a 3-year high, Caroline. That's a story of another manufacturer struggling to have their output be at full potential given the cost of energy.
Okay, so that's your data check then this morning. Let's go on to our top stories. More difficulties in terms of Britain's energy market. Glencore-backed UK gas supplier CNG Group announced that it will no longer provide gas to its utility clients. CNG supplies wholesale gas to utilities who then sell it to households. The move could well push more retail suppliers out of business here. Pure Planet, which is backed by PP, and Colorado Energy announced their closure just on Wednesday.
Let's stay here in the UK, where 8 out of 10 companies struggled to recruit last month. That's even as many of them increased wages. According to a survey by the British Chambers of Commerce, the hiring difficulties are more acute in the catering and hospitality sector, where 92% of companies reported difficulties.
And finance ministers from the world's biggest economies have endorsed a global tax overhaul. 136 governments had earlier reached a deal over a minimum rate to be set at 15% for corporations. But plans for digital taxes have also been scrapped after the US said that they were discriminatory. The stage is now set for G20 leaders to approve the accord at a summit later this month.
And in top corporate news, Bank of America, Citigroup and Morgan Stanley report earnings today. And once again, lending growth will be a major focus. Bloomberg's Larry Kofsky has the details.
B of A and Citi traded lower yesterday after J.P. Morgan reported a decline in consumer and commercial lending. Analysts see a more than 3% decline in total loans at Bank of America. Cities are expected to grow by 5.3%. Morgan Stanley is expected to see a 6% profit gain on strong institutional revenue. Larry Kofsky, Bloomberg Daybreak Europe.
Right, those are a few of our top stories this morning. Let's get to the latest in global news headlines with Bloomberg's Leanne Guerin standing by. And of course, it's all about the Brexit headache. Good morning.
Yes, indeed, Caroline. Good morning to you too. The UK government says it will consider EU proposals to ease Northern Ireland's trade issues seriously and constructively. Yesterday, the European Commission unveiled its plan, which would see a reduction of up to 80% in checks on some goods arriving from Great Britain. It would also see customs paperwork cut by half. Brexit Minister Lord Frost is optimistic about the state of negotiations.
We need to find arrangements in Northern Ireland that work to support the Good Friday Agreement, and that means all its dimensions, east-west, north-south. We're asking everyone to be flexible, find compromises, look at things in a different way.
Meetings will take place in London later between the EU and the UK. We're also just getting some breaking news across the terminal from Sajid Javid. He's speaking to Sky News. He says the role of the European Court of Justice is one of the most important Brexit issues. More on that throughout the story today. Here in England, coronavirus infections are high and rising among children. Bloomberg's Pooja Kondia has more.
Prevalence of COVID-19 is growing amongst those aged 17 and younger. That's according to the REACT-1 study led by Imperial College London. The reproduction rate in this age group was 1.18, meaning that on average every 10 young people infected are passing it on to about 12 others. Coronavirus vaccines were rolled out to 12 to 15-year-olds last month, but take-up is slow, putting pressure on Boris Johnson's government. Ministers are renewing calls for young people to get vaccinated. In London, I'm Pooja Kondia, Bloomberg Daybreak Europe.
In Norway, police are considering if an incident that saw 5 people killed and 2 injured in a bow and arrow attack is an act of terror. The assailant is suspected of acting alone when he walked around shooting in the centre of Kongsberg, a town about a mile from Oslo. Police say officers around the country will be armed temporarily as a result of this incident. And the World Health Organization has proposed a new team to lead an investigation into the origins of the COVID-19 pandemic. 26 proposed members of the group were selected from 700 applications and have expertise in a range of areas from epidemiology to biosecurity. A controversial joint WHO-China mission earlier this year found that the coronavirus probably spread from bats to humans via another animal. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Guerin. This is Bloomberg Danny.
Leanne, thank you so much. Now, a lot of ink has been spilled on the debate between value stocks, so the cheapest ones, and growth and tech. Probably the most prolific writer, and if not the most closely followed, is Rob Arnott, who is the founder and chairman of Research Affiliates, who I'm pleased to say joins us now. Rob, it is such a pleasure to have you here in the studio with us. So anyone who follows your work, and there are plenty of people who do so, know that you really like value. Last month, you had a research paper where you wrote, the opportunity to buy might be short-lived, and we might wait decades for an opportunity of a similar scale. Can you describe to investors who heed your warning how short-lived this opportunity is? How much time do we have here to jump in and buy value before it's too late?
Well, the short answer is nobody knows. The longer answer is the likelihood of value beating growth on the shorter your time horizon, the more uncertain that is. On a one-year horizon, I think I'd place the odds at about 70-30 in favor of value. And on a 3-month basis, probably 55-45. So anything can happen near term. But the simple fact is value is cheaper than at any time in history relative to growth. That is to say, there's a bigger spread in valuation multiples between growth stocks and value stocks than any time in history other than last summer. Cheaper even than at the peak of the tech bubble. And as the tech bubble burst, I remember thinking at the time, well, I'll never live long enough to see anything quite like this again. And here we are again. So it's an extraordinary bubble, and it's a wonderful opportunity to trade into the out-of-favor value segments of the market.
So surely people in Europe should be rubbing their hands with glee. Where are you looking for those opportunities then?
Certainly part of the issue is the pricing of the broad market itself. One thing I like to use is what's called a Shiller PE ratio. It's price relative to 10-year smoothed earnings. So it takes out the effects of the economic cycle. As you have a surge in the economy, you get a surge in earnings, and so PE ratios look artificially low because the earnings have been strong. When you get a recession, earnings tumble, the PE ratio looks artificially high. By smoothing things over a 10-year horizon, you wind up with a much more powerful metric. And what we find is that the U.S. is at about 38 times 10-year earnings. That's huge. It's been higher only once. Peak of the tech bubble, it reached 44 times. Europe is under 20. UK is under 15. That's better than half off relative to the U.S. So I look on Europe as an interesting opportunity. I've been sometimes called a perma-bear. I'm not a bear when things are cheap. I'm a bear when things are expensive. And so within the UK, you also have value versus growth, and the spread between value and growth is almost the widest ever, which means that value stocks in Europe, value stocks in the UK, and value stocks in emerging economies in the world all represent extraordinary opportunities.
So Rob, is it going too far to say then that you talk about the bubble in tech stocks, but of course tech is such a huge weighting of the overall U.S. S&P 500 benchmark. Does it go too far then to say that if you're looking at a market cap weighted S&P 500 index, that in itself is in a bubble?
I wouldn't use the word bubble, but I would say it's stretched. We have a website, Asset Allocation Interactive, which allows people to look at forward-looking returns for 130 different markets around the world. And apart from U.S. Treasuries, U.S. stocks are about the most expensive. And so what we find is that the expected return for U.S. stocks on a 10-year basis is about 1% per annum. It's not even enough to capture the dividend. That is to say that the prices are expected to be lower 10 years from now than today. And
the world's financial decision makers connect on the Bloomberg terminal. The buy side and the sell side together, collaborating across markets and countries in real time. sharing ideas, negotiating trades, and forming an influential network of over 325,000 financial professionals that helps power global markets. Isn't it time you join them? Request a demo at bloomberg.com/professional.
You won't even have captured the dividend. That's daunting. And if you look at the UK, we're seeing more like 6.5% expected return. Emerging markets, 7% expected return. UK value stocks, 4 to 5% higher still, so 11% return. Emerging markets value 12. These are 10-year returns. If you can make 12% on your money every year for 10 years, you're looking at nearly quadrupling your money in 10 years.
You've also had a big debate with Cathy Wood.
That was fun.
What do you think that her strategy gets wrong? How does this unravel, I suppose?
I think what she gets wrong is something very, very simple, and that is you can have a wonderful company that is priced high enough that it's a terrible stock. And I think that's true across a lot of the disruptors. Disruptors get disrupted. People forget that. I use the example of Palm, which went public in 2000, spun off from 3Com, briefly worth more than 3Com was before the spin-off, suggesting that the rest of 3Com was worth a negative sum, and briefly worth more than General Motors. Well, both subsequently went bust. But that company was a major disruptor. The Palm Pilot was a terrific product, supplanted very quickly by the BlackBerry, supplanted after a half dozen years by the iPhone.
Yeah.
Innovation is something that is a constant in the economy. It's not new.
Yeah.
The individual products are new. Innovation is not.
Yeah, I love that disruptors get disrupted. I do have to wonder then, I know that this is not an asset that you necessarily concentrate on, at least day to day, but when we're talking about market frothiness and disruption, often the conversation wanders into the land of crypto, Bitcoin. What do you make of it, Rob?
Well, I like to invest in things I understand, and I don't understand the raison d'etre for Bitcoin. The purpose of money is threefold. It's as a measure of the value of a good or a service. It's as a store of value across time, and it's as a medium for transactions, for trading my time for yours, for instance. We both get paid for our time, but if I wanted to say I'll give you 5 minutes of investment advice in exchange for 5 minutes of conversation with you on air, that would be a little weird. That's the barter system. That's what predated currencies. So money serves those three purposes. Which of the three is Bitcoin good at? Zero. Not one of them. You can't use it for transactions because it costs about $20 to do a transaction with Bitcoin. If you want to buy a Starbucks, it'll suddenly cost you $20 extra if you buy it with Bitcoin. A stable store of value across time? Give me a break. A means of valuing a particular good or service. What's the price of a Ford car measured in Bitcoin? It goes around like crazy. So it's not any of the three purposes. Anyway, that's a long way of saying I don't understand it. So I don't have an opinion other than to suggest that there's a decent chance it's a bubble. There's a decent chance that it will disappoint its long-term holders. But I sure wouldn't want to bet the farm on that.
Something that is perhaps a bit more understandable, electric vehicles, but you also say that that's not a great investment either. Why not?
We wrote a paper earlier this year called The Big Market Delusion that looked at electric vehicles. Big market delusion is when you have a new product area and you have half dozen or more disruptors creating competing product in that space. And the big market delusion is every single one of the companies is priced as if it will be one of the winners. And yet they compete against one another. They compete against established car makers who have lots of knowledge and experience in electric vehicles. Toyota's been a pioneer in hybrids and electric cars right from the get-go, and has vastly deeper pockets than Tesla or any of the other EV makers. And here's a shocker. At the start of this year, Tesla, which was priced north of 20 times sales, forget price-earnings ratio, 20 times sales, was the second cheapest electric vehicle specialist. The rest of them were priced at higher. One of them priced at, I think it was 15,000 times sales, because the sales the previous year measured in 3 digits, several hundred pounds of profit. Sales.
Yeah, Rob, I am curious, and quickly here, unfortunately, we don't have too much time. You mentioned when we were speaking on Bloomberg TV earlier that tech investors need an exit strategy. Can you elaborate that on a bit? What exactly would an exit strategy mean for tech investors at this moment?
It's actually a very simple concept. Bubbles can go much further and last much longer than anyone could imagine. And because of that, I'm very hesitant to say, don't buy tech. But I would say, if you're going to buy tech, you darn well ought to know what the trigger will be that will cause you to say, okay, enough, I'm out of here. Otherwise, you're picking up nickels in front of a steamroller with no strategy to get out of the way of the steamroller.
Yep. Definitely not a strategy that would be conducive to any sort of safety. Rob, it has been such a pleasure to have you on with us. Please come back anytime you are in London. That's Rob Arnott, chairman and founder of Research Affiliates.
Yeah. Thanks so much for your time. Right, coming up next on Bloomberg Daybreak Europe, more conversations on the markets. John Rowe, head of multi-asset funds at Legal & General Investment Management, will also be here on Bloomberg Radio. This is Bloomberg.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in the City of London, I'm Max Ramsey with this Bloomberg Radio Business Flash. Global stocks and futures positive today. The MSCI Asia Pacific rises 0.6%. China underperforming today. CSI 300 down around 0.6%. We, of course, had inflation figures out of China. Factory gate inflation the highest since 1996. Japan, though, closing up 1.5% on the Nikkei. Broadly, we are not getting bogged down by this raft of macro data points that we've had. US CPI, of course, holding above 5%. We also got Fed minutes from the September meeting signaling a taper in mid-November or mid-December. US futures rising 0.6% on S&P 500 E-mini futures, 0.7% for NASDAQ futures. We got a move lower in yields yesterday. We come up a little bit on the US 10-year yield, rising 2 basis points, 155.60 the yield there. We also had a little flattening of the yield of the US yield curve yesterday, just steepening a little bit right now. The 5/30 spread rising 4 basis points, 99, or in fact around 100 basis points the spread there. The dollar just weakening a touch on the Bloomberg Dollar Spot Index. In terms of Europe, rising on European futures just over 10 minutes from the start of equities trading across the continent in Europe. Euro Stoxx 50 futures up 0.7%, and strength in oil rising 0.8% on WTI, $81.10 per barrel. That's a Bloomberg Business Flash. Now let's get to Leanne Guerin for more on the global news headlines. Good morning, Leanne.
Max, good morning and thank you. Here in England, GP surgeries that do not offer enough face-to-face appointments will be unable to access new funding under plans announced this morning as part of a new package of measures to improve services, and has been backed by £250 million. Those that fall short will instead be given an improvement plan. Now, Germany's Olaf Scholz says an SPD-led government will drive forward an expansion in renewables and energy infrastructure investment. On a two-day trip to Washington, an expansion in renewables and energy infrastructure investment. On a two-day trip to Washington as Germany's finance minister, he expressed confidence that he'll form a government by Christmas. And in Indonesia, the much-anticipated reopening of Bali is off to a slow slow start, with no international flights scheduled. As of today, fully vaccinated travellers from 19 countries, including China, India and France, can enter Bali. The UK is not on that list. Officials had closed the international airport in April last year to stop the coronavirus from spreading. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Caroline.
Oh, but Leanne Gerrans, you told me all about Bali, and then you told me I can't go.
Well, you told me about Bali one day too, Caroline Hepker, and I went after you did. And I actually followed Caroline Hepker to Bali. And one thing she did say to me is, that flight is very long. And I thought, oh, she's exaggerating, but she wasn't. That flight is very long.
From London, yeah.
Yes, from London.
I have no sympathy. I would gladly take a long flight to get to Bali.
Well, I definitely would now. But isn't this interesting that in July, Indonesia really became the epicenter of the COVID outbreak over in Asia? We saw lots of daily cases and things seem to be starting to improve slowly. So I don't know if this is a little bit of optimism for us that we could all follow each other to Bali again next year, maybe.
Yeah, perhaps holidays are back on. Leanne Gerrans, thank you so much for the world news and a little bit of travel and imagination for us this morning. Right, let's get on to the markets then, shall we? So interesting that money markets at the moment see a third 25 basis point interest rate rise from the Bank of England next year. Inflation doesn't look so transitory here in the UK. Joining us now is John Rowe, Head of Multi-Asset Funds at Legal & General Investment Management. John, good morning. What's your view then? Is that debate about transitory inflation really kind of dead in the UK at least?
I think the UK is a bit of a special case because of the impact of Brexit, and obviously that's reduced the supply of labour, which in turn causes a shock. And Boris Johnson's talked about his intention to create higher paying jobs. Now, there are two ways that can happen. They can be higher productivity, in which case people can have higher real pay, or it can just be a labour shortage, in which case you just get inflation. And effectively, there's no improvement in people's productivity, in which case you can't really, as an economy, pay them more. That's kind of the central issue. So I think in the UK it's a bit of a special case, and there's probably less chance that it's transitory. I still think there's a lot of debate over whether or not it's really a good idea to hike interest rates into an environment where consumer spending's been really hit by things like the gas prices. A lot of that feels quite bad for the consumer.
Yeah, I mean, I was going to say, John, we've even heard from Andrew Bailey himself saying that higher rates won't create more semiconductors. When you have these sort of supply-driven inflationary pressures, could we possibly be heading for a policy mistake if the Bank of England does indeed hike 1% at the end of next year, as money markets expect them to?
I think that's definitely a risk, right? I mean, you're effectively, if you look back at lots and lots of past recessions, a lot of them involve kind of tightening unduly, and effectively the shock to consumers, the increase in consumer prices, is just like a fiscal tightening. I mean, if the government had come out and said, we're going to raise taxes, and then said, oh, look, because we've raised taxes, things cost more, we should hike rates. People go, what? No, the things cost more already. You've already made it worse for people, and now you want to hike rates. So it all comes down to, is it going to lead people to be able to claim higher wages? That becomes the key questionable point. Personally, if it was me, and given the problems that developed markets have had in generating inflation on a sustained basis for the last decade, I'd err on the side of caution and wait until I really saw those wage pressures feeding through on a sustained basis. But clearly the Bank of England is keen to be more cautious.
We're at a very crucial pivot point. The Fed minutes from yesterday showed that the tapering in the US could begin as soon as next month. We've also had out the inflation, factory price inflation in China. The Treasury curve in the US is showing kind of some increasing concerns because through flattening that actually what the Fed does may derail the recovery. So we're at a really important pivot point, John. What are the key exposures that you want to have now? What are the opportunities that you see at the moment at this difficult time in the global economy?
I think exactly as you said, uncertainty's picked up a lot. And the higher uncertainty is, the more worried we get about consensus or popular positions. We're always worried about them, but we get more and more worried the higher uncertainty, because people believe in one narrative when actually the range of outcomes is really broad. And right now, the range of outcomes to us feels very broad. So we were short US interest rates. We exited that about a week ago because we felt that nearly everybody wanted to be short US interest rates. The ones we've got left now are short US inflation. And that's really around the idea that if we get inflation, then actually the Fed will act and will bring it under control. And so from that perspective, actually higher short-term inflation doesn't necessarily mean that forward inflation expectations, market pricing goes up that much more because the Fed will react, which is one. And secondly, we believe in a structural deflationary story. We think COVID in many ways could actually structurally be deflationary, not inflationary. It increases the ability to outsource your workforce. And then the second one is short credit. So credit spreads, particularly in IG, investment grade, are so tight that actually there isn't that much potential for tightening. So on that one, we see it as a kind of asymmetric inflation hedge. If inflation does pick up, who will want to own a semi-liquid nominal asset, which is what corporate bonds are? So those are the kind of two that we're looking at to try and lean against market sentiment.
Well, on the more liquid side of that corporate story, on these equity markets, as we enter earnings season, what do you want to hear on these endless corporate calls that would lend itself to a more supportive environment?
I think it's the kind of stories, anything around supply shocks being temporary, the potential for semiconductor shortfalls to start to ease, anything. There's so much negativity built in on supply chains in particular that feels like one area where the bar for bad news is really high already, and actually the bar for good news is pretty low because everyone's expecting every single company to come out and say there were problems with supply chains. So that's probably the most important one. I guess the second one would be if companies started to talk about investing in reducing the need for labor, then given the current labour shortage, that would also look positive, I think. So if you start to see people saying, that's fine, there's going to be a shortage of people that want to work in retail or work in food, so we'll increase the use of of technology to reduce the need for people in those areas. You think, well, that's okay, at least they're adjusting to this potential shock.
John, thank you so much for joining us and for your views. John Rowe is Head of Multi-Asset Funds at Legal & General Investment Management. In what's been a really interesting hour, Danny, not just John, but also Rob Arnott, who's the Chairman and Founder of Research Affiliates. I thought what he had to say about the UK was so interesting, in the kind of value argument that he makes.
Yeah, and the UK has been just perennially underloved. So to say, hey, this is such a huge opportunity, definitely something that investors should be looking for. Now, in the next hour, we continue the conversation with Bloomberg Daybreak Europe. This is Bloomberg.
Lost revenue. 4 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
This is Bloomberg Daybreak Europe for this Thursday, the 14th of October in London. Coming up this hour.
Price pressures. China sees the highest factory inflation in 26 years after U.S. CPI prints above 5% again. Fed minutes suggest tapering as soon as next month.
Earnings season ramps up. Bank of America, Morgan Stanley and Citigroup report later. TSMC reports quarterly profit that beats expectations as margins recover.
The UK and EU discussed the Northern Ireland Protocol after concessions in a bid to cool Brexit tensions and a plan to increase face-to-face GP appointments post-pandemic in England. I'm Leanne Gerrans with World News.
And Anna Botín, Santander chairman, tells Bloomberg she sees inflation as temporary. We bring you that exclusive interview.
That's all straight ahead on Bloomberg Daybreak Europe, on DAB Digital Radio London, Bloomberg 1130 New York, Bloomberg 99.1 Washington DC, Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, Sirius XM Channel 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Good morning from London. I'm Caroline Hepker.
And I'm Danny Berger. You're listening to Daybreak Europe live on London DAB Digital Radio. Caroline, we have a great hour coming up, but we also just spoke to Rob Arnott of Research Affiliates, which I love his warning about tech. Disruptors get disrupted.
Yeah, absolutely. I mean, he's got a slightly dismal view of the electric car makers, and he's very optimistic about the picture in the UK. You know, it's always been very unloved, certainly in the last few years and since Brexit. So, yeah, it was a very good conversation.
Yeah, absolutely. And maybe some people listening in, because we are looking at UK markets moving higher this morning. Let me give everyone a quick data check. Markets just opening up. We're looking at the FTSE 100 up 0.7%. One of the big outperformers today, but the overall benchmark also up about 0.7%. And you'll see a similar thing when it comes to your American equity benchmark futures up 0.5%. We are getting somewhat of a relief from lower bond yields yesterday. That's allowing some of these longer duration assets like tech do better. NASDAQ 100 futures up 0.7%. And when it comes to that bond market story, basically just hanging tight. We're seeing most of the move coming from the long end of the curve. If anything, it's somewhat of a reversal from yesterday where we saw 30-year yields push down. We had a big auction, but now 30-year yields up about 4 basis points. Some of the other big movers are just in the commodity space. It's this continued story of higher energy prices, higher inflation concerns. So Brent oil up about 1%. Meanwhile, a weaker dollar translating into your cable up about 0.2% at 136.87, and your euro dollar at 116, Caroline.
Okay, so let's dive deeper into the markets and what stocks to watch this morning. Bloomberg's Morwenna Coniam joins us now. Publicis, first of all, Morwenna. They see their revenue forecast beating estimates.
Good morning. Yes, so Paris-based ad agency Publicis said that their revenue grew faster than expected in the third quarter. That was after investments in marketing and data helped make it, make the most of that boom in e-commerce that we saw during the pandemic. So as well as revenue exceeding its pre-pandemic level in the third quarter, they have also raised their full-year revenue guidance, and that's actually for the second time. So they're also looking to use bolt-on deals to grow their Europe data in future, and they've obviously made some acquisitions this year too. So shares are responding quite positively this morning, up about 3.1% in Paris so far.
Okay, interesting. What about CNH Industrials? They're talking about temporary plant shutdowns in Europe. Uh-oh.
Yeah, so they have said they're going to close several of their European agricultural, commercial vehicle and powertrain manufacturing facilities. And that is due to ongoing disruptions in the procurement environment, so that's supply chain problems we've been hearing about, shortages of core components, especially semiconductors. And they say that they're reviewing their production schedules, and they plan to shut this plant for no longer than 8 working days during October. But shares are down this morning in Milan, down about 0.8% there.
Okay, and then in terms of an EBIT miss for CHR Hansen.
Yes, so they said their fourth quarter EBIT before some special items missed the average analyst estimate, but the sales performance did beat what people were expecting. They do point to things like limited customer access, delayed registration times, and the macroeconomic uncertainty that could come with COVID as one of the things that really weighed on the second half. But they do see growth, rising in coming months, and they see an increase in EBIT margin over the next coming period, and they've actually updated all of their long-term financial ambitions up to 2024 to 2025, which will reflect some divestments they've made. So they are trying to look further ahead rather than back, but that does seem to be wearing on the shares this morning, down about 3% there.
Yeah, okay, so CHR Hansen, which makes ingredients, so enzymes, a specialty chemical business. Thanks so much, Morwenna, for being with us. Bloomberg's Morwenna Coniam there, talking us through what stocks to watch.
Now let's get some of today's top stories, and we start here in the UK, where trade associations and business leaders have called for an urgent review to business rates. Bloomberg's Ewan Potts reports.
The CBI and 41 other organisations have written to Chancellor Rishi Sunak to say that companies should be exempt from business rates for investments in emissions-reducing machinery. The groups argue the current system actively discourages business investment in decarbonisation. In the statement, they say that a reform could help boost investment in green initiatives. But the Telegraph reports Sunak is unlikely to make major changes in his upcoming budget due in less than 2 weeks' time. In London, I'm Ewan Potts, Bloomberg Daybreak Europe.
Meanwhile, when it comes to the energy crisis here in the UK, more difficulties expected. Glencore-backed UK gas supplier CNG Group announced that it will no longer provide gas to its utility clients. CNG supplies wholesale gas to utilities who then sell it to households. The move could well push more retail suppliers out of business. Pure Planet, which is backed by BP, and Colorado Energy were just the latest to announce their closure on Wednesday.
Let's turn to data out this morning. We had China's factory gate inflation soaring in September to the highest level since 1995. Bloomberg's Brian Curtis has more on the story.
PPI jumped 10.7%, stoked by a nationwide energy crisis and spiking coal prices. The reading was higher than the 9.5% gain in August, and it exceeded the 10.5% estimate. Now, consumer prices were held in check by falling pork prices. The CPI was up 0.7% last month from a year earlier, slightly lower than the estimate. Now, China's move to cut energy consumption has led to an electricity shortage, and as a result, we've seen factory production halts in more than 20 provinces. I'm Brian Curtis, Bloomberg Daybreak Europe.
Well, staying with inflation data, in the US today, the government issues the Producer Price Index. Economists are forecasting a September increase of 0.6%. That would be the 11th consecutive monthly gain.
We also have inflation data out later today that follows the release of the Federal Reserve's minutes of last month's meeting on monetary policy, and the committee is sticking to the taper timeline. Bloomberg's Vinny Del Giudice reports.
The minutes show Fed officials agree they should start tapering emergency economic support in November or December. That $100 billion in monthly asset purchases. But with a catch, the U.S. economic recovery from the pandemic remains on track. There have been signs of a pullback. Central bankers next meet at the beginning of November. Vinny Del Giudice, Bloomberg Radio.
Meanwhile, the ex-Treasury chief Larry Summers has had some critical words for the Fed. He says that global policymakers are paying too much attention to social issues and not enough to the biggest risk to inflation since the 1970s.
We have a generation of central bankers who are defining themselves by their wokeness. They're defining themselves as by how socially concerned they are. They've grown up and had their whole experience shaped by a period when inflation was below target. And so it's very hard to lose old habits.
Well, Larry Summers went on to say that US inflation, which jumped to 5.4% last month, could spin out of control and that the UK is even further behind the curve. But one does detect perhaps a generational divide here?
Yeah, I think I think woke is not really the word to use anymore.
Term, isn't
it is a very loaded term. I think many would respond to that, not me, but many would respond saying, okay, boomer, to someone using the word woke as an insult. Anyway, let's stay with central bank news. Turmoil once again in Turkey. The lira slid to another record low after President Erdogan fired 3 central bankers in a midnight decree. Bloomberg's Simin Demokin reports from Istanbul.
The changes follow a meeting between Erdogan and Central Bank Governor Sharp Kavcıoğlu. According to people familiar with the composition of the committee, the changes rid the committee of members who disagreed with Erdogan's calls to continue cutting interest rates. Last month, the central bank surprisingly lowered the benchmark interest rate by 100 basis points to 18%, despite accelerating inflation. In Istanbul, Simin Demirkan, Bloomberg Daybreak Europe.
Meanwhile, in earnings news this morning, Taiwan semiconductor manufacturing company's quarterly profit beat expectations. That says demand for TSMC's chips stayed robust in the face of worsening hiccups in terms of the supply chain. So the world's #1 foundry said on Thursday that net income for the 3 months ending in September rose 14%.
All about the supply chain this earnings season. Now let's get to the latest in global news. Here's Bloomberg's Leanne Guerin. Hi, Leanne.
Danny, good morning and thank you. The EU and the UK are braced for a new round of negotiations in London over the coming days over trade barriers in Northern Ireland. That is after Brussels unveiled a set of proposed adjustments to the trade protocol that would slash customs checks in the territories by half and cut sanitary inspections on many retail goods by 80%. European Commission Vice President Maroš Šefčovič says their priorities are clear.
Our #1 priority remains to ensure that the hard-earned gains of the Good Friday Belfast Agreement, I'm talking about peace and stability, are protected while avoiding a hard border on the island of Ireland.
Meanwhile, the British say the existing arrangements are unworkable. In England, GP surgeries that do not offer enough face-to-face appointments will be unable to access new funding under plans announced this morning. It is part of a new package of measures to improve services and has been backed by £250 million. Those that fall short will instead be given an improvement plan. Now, Germany's Olaf Scholz says an SPD-led government will drive forward an expansion in renewables and energy infrastructure investment. On a two-day trip to Washington as Germany's finance minister, he expressed confidence that he will form a government by Christmas. Speaking to Bloomberg TV, he also weighed in on Europe's energy crisis.
There are a lot of prices that increased for oil and gas, for instance, which is also due to the economic recovery we see worldwide and some other reasons. But so far, all the experts tell us that in the next year we will have a normalization of price inflation again.
And the World Health Organization has proposed a new team to lead an investigation into the origins of the COVID-19 pandemic. The 26 proposed members of the group were selected from 700 applications and have expertise in a range of areas from epidemiology to biosecurity. A controversial joint WHO-China mission earlier this year found that the coronavirus probably spread from bats to humans via another animal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Caroline.
Thanks so much, Leanne Gerrans. Just time for your sports news now. Here's George Alderman.
New Watford manager Claudio Ranieri insists he still has plenty to offer as he approaches his 70th birthday. The Italian, who led Leicester to the Premier League title in 2016, will reach the milestone next week. He's been brought in to keep Watford in the top flight. Chelsea have their first win of the Women's Champions League group stages after claiming a 2-1 victory over Juventus last night. The result in Turin leaves last season's runners-up with 4 points from their opening 2 games. Arsenal look to bounce back from a 4-1 thrashing by Barcelona when they host Hoffenheim tonight.
All right, that was your morning sports. Now, still ahead on Bloomberg Daybreak Europe, we had JP Morgan yesterday and more banks today. We have your full preview of Bank of America, Morgan Stanley, and Citigroup report later. This is Bloomberg.
Jody Schwartz.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to the real-time financial news, data, and analytics that can take your workflow to the next level. Power up at Bloomberg.com/professional.
Noted tax attorney tells us why she recommends Jewish Communal Fund.
I recommend the JCF to my clients, to my colleagues, to really anyone who asks a question about charitable giving because it's convenient. It allows you the maximum tax deductions permitted by law, and it just makes your life easier, organized, and simple. Another aspect for clients and for other colleagues who don't want their identities to be known or don't want to talk about the property that they're giving away to charity, I found JCF's confidentiality, its aggregate reporting to be very attractive to people.
JCF can help you and your clients organize your charitable giving with a donor-advised fund. A fund can be established with a tax-deductible contribution of $5,000 or more. Contributions to JCF qualify for the highest tax deduction allowed by law. Visit jcfny.org or call 212-752-8277.
Portfolio Analyst, powered by Interactive Brokers, helps sophisticated investors understand the health of their complete financial portfolio. Portfolio Analyst is free and easy-to-use personal finance software that creates a consolidated view of banking, brokerage, and credit card accounts. Compare your consolidated portfolio against more than 200 benchmarks or create customized benchmarks for analyzing performance. Calculate time and money-weighted rates of return and use Portfolio Analyst for forecasting. Sign up for free at portfolioanalyst.com.
Neil Armstrong waited 6 hours and 39 minutes to step onto the surface of the moon. Jackie Robinson waited 20 months to play his first game with the Brooklyn Dodgers. And even DiCaprio had to wait 22 years to win an Oscar. You can wait until your destination. Don't text and drive.
Visit StopTextStopWrecks.org. A message brought to you by the National Highway Traffic Safety Administration, Project Yellow Light, and the Ad Council.
Influential conversations from Bloomberg Television. Here's Anna Edwards.
Joining us now, James Affey, Aberdeen Standard Investments Investment Director. James, really nice to speak to you. So give us your sense then of where the US inflation story peaks, where or when. Which do you think you've got a better handle on? What are we able to say with any certainty about the inflation story in the US at this point?
I've long been of the opinion that inflation is not a concept that we understand well at all. I don't think any of the macro theories are robust. I do believe that there's an interplay between macro and micro, and that makes it very difficult to understand and very difficult to model. And what we've experienced in recent months, what we're experiencing at the moment, is a combination of these gigantic forces colliding in a way which raises the difficulty of making those forecasts, more than a few days, weeks or months hence. Very difficult indeed. So I don't know. To me, the weather debate, I think, sometimes implicitly goes awry is people thinking about levels and not thinking about changes. Inflation is a rate of change, obviously. We see percentage changes being reported as the rate of inflation. There is a difference between saying that prices will not return to their prior level and saying that inflation will continue.
Hear more conversations like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app. Or check your local cable listings. Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in the City of London, I'm Max Ramsey with this Bloomberg Radio Business Flash. We're just over 15 minutes into the European equities session and we push higher across the continent. The Stock 600 up 0.6%, a similar move higher for the FTSE 100. The DAX up around 0.5% and up around 0.5% as well for the CAC 40. Taking a sector view, almost entirely in the green across the Stock 600 industry groups. Utilities the only one in the red. Basic resources and tech lead the gains. Energy also doing well today. We've had a little bit of selling in European bonds. The yield on the 10-year bond rising just 1 basis point, negative 0.116%. The yield on the 10-year gilt rising 2 basis points, 1.109% the yield there. The pound also having some strength today, up around 0.3% against the dollar, $1.3697 to the pound. We were broadly positive in Asia earlier. The MSCI Asia Pacific up 0.6%. Just a little bit of weakness in China, down around 0.5% on the CSI 300. We did, of course, get those inflation figures. The hottest factory gate inflation since 1996 there. Also, of course, US inflation figures today. Futures in the US rising up 0.4% on S&P 500 E-mini futures. The US 10-year yield 154.73 and a little weaker on the Bloomberg Dollar Spot Index. Finally, some strength in energy markets. So right now, still pushing higher on WTI, up 0.8%, $81.05 per barrel. That was a Bloomberg Business Flash. Now let's get to Leanne Gerrans for more on the global news flow. Good morning, Leanne.
Good morning, Max, and thank you. In Norway, a man has been held for questioning after arrows were fired at shoppers in a small town last night. 5 people were killed and 2 others injured, including an off-duty police officer. The attack's been described as gruesome by the mayor of Kongsberg, near the capital, Oslo. Now, the Chancellor Rishi Sunak is insisting the government is doing everything it can to make sure supply issues are fixed, and says he is confident there will be enough Christmas presents to go around. Toy manufacturers have gone against ministers to encourage parents to shop early this year. Containers have been backed up at ports in recent days, and that is on top of a lack of lorry drivers. And in Australia, Westpac has become the first of the big banks to mandate vaccines for its employees. The bank says it expects all workers entering a workplace in the eastern states of New South Wales, Victoria and the Australian Capital Territory to be fully vaccinated by the 1st of December. Meanwhile, staff in other parts of the country have until the 22nd of February. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Danny.
Leanne, thank you so much. Now, Bank of America kicks off a busy morning for banks today. All eyes will be on the lenders' loan growth after JP Morgan Morgan's mixed numbers. We're also going to be hearing from Wells Fargo, Morgan Stanley, and Citi across the board commentary on loan growth and signs that consumers are taking on more debt will be key. Well, joining us to discuss is Bloomberg's Candice Zacharias. Candice, thanks for joining us. So what for you were the high points from JP Morgan's results yesterday?
Hey there. I think the high point for JP Morgan's results are very closely watched set of numbers, right? Really, I think the biggest highlight was it's boom time for the lenders, deal makers once again. They posted their best quarter yet in a year that's shaping up to be a record overall for M&A. We saw investment banking fees jump 52% for the lender, with advisory almost tripling, equity underwriting fees jumping 41%, and equities trading surging as well. All of this bodes very well for JP Morgan's global peers, particularly Goldman Sachs and Morgan Stanley, who we hear from soon, given that they have relatively more revenue exposure here. On the other hand, Citi could see some weaker trading results given their focus on fixed income.
OK, what did the results from JP Morgan again say about loan growth, something that's been such a focus for investors?
I think we've seen Wall Street executives start pointing to early indications that small businesses and consumers are beginning to take on debt again. A lot of that was depressed earlier on because of the stimulus checks linked to COVID. I think what JP Morgan's numbers show us is that there's still some ways to go for a real turnaround. Overall loan growth came in 6% higher from a year ago, but it was thanks to asset and wealth management and the corporate investment bank. Consumer and commercial loan growth remained elusive for the lender. And you had the CFO come out and say that credit card balances should begin to grow, but he expects it'll take some time before they return to pre-COVID levels.
What about when it comes to the market action we saw from JP Morgan and all of the banks as they report at earnings? It seems that investors might not have taken the results so well.
That's right. I think investors seem disappointed by those numbers that I just mentioned to you, signs that loan growth continues to remain stubbornly out of reach for a lot of these banks. JP Morgan stock was down 2.5%, and it was joined by a number of other stocks, including Bank of America, Citigroup, and Wells Fargo, all of whom we'll hear from later today. And I think from that group, Wells Fargo is expected to show some, reasonably weak numbers when it comes to that loans number.
I was also rather fascinated that JP Morgan's expenses are going to go up in 2022, or they expect them to, because they're going to pay people more, paying for talent. Is this going to be another theme in Wall Street Bank earnings?
Well, I think we've seen a lot of that already, right? We've crossed the board, and that's not just in the U.S. or just with JP Morgan. We've seen it in the U.S., we've seen it in Europe, we're seeing it in Asia, where I'm based. Banks are just having to pay for talent. There's a lot of demand out there for young bankers, for experienced bankers. It's been boom times in a number of these sectors. And so I think you might very well see, as you say, this be a theme across some of the earnings.
All right. Candice, thank you so much. Ahead of all those bank earnings, that's our Candice Zacharias. Yeah, Caroline, I think this pay question is just so fascinating because there has been this discontent, especially among junior bankers we've heard of from. And a lot of the response has been, pay them more.
Yeah, and they've upped the pay, and yeah, you're right that it is those junior entry level jobs. But then, mind you, the battle to get talent in lots of different spheres really is on, isn't it? As economies reopen post pandemic. Well, speaking of which, we have got lots coming up in the next part of Daybreak Europe. We're going to bring you our exclusive interview with the chairman of Banco Santander, Ana Botín. She's got some thoughts about inflation and whether it's transitory or not, and the recovery. So that interview is next. And also in terms of the markets then, we're 24 minutes into European trading. We're up 0.6% on the Euro Stoxx 600 this morning. This is Bloomberg.
This is a Bloomberg Money Minute. You may want to buy some extra sweaters before winter gets here. The government says heating costs are expected to soar as temperatures tumble. Households using propane will see the biggest increase, 54% from last year. Heating oil costs are expected to rise 43%, natural gas 30%. Advisors for the Food and Drug Administration meet today to discuss booster doses for those who got the Moderna and Johnson & Johnson COVID vaccines. The panel has already recommended a booster for some people who received the Pfizer shot. The clock is ticking toward a possible strike by one of Hollywood's most powerful unions. Workers, including art directors, camera operators, and editors, say they'll strike next Monday unless they get a contract offering improved pay and working conditions. A walkout would cripple the film and TV industry. The union says talks are continuing. Larry Kofsky, Bloomberg Radio.
Economics. Chairman Powell looks brilliant. Finance.
Some breaking news for you. A share sale.
Investment.
The narrative of the reopening trade has changed.
The Bloomberg Surveillance Podcast.
Do you want some volatility, Tom? Please. Do you want me to go there?
Tom Keene, Jonathan Farrow, Lisa Abramowitz, and the names that shape the world's markets.
Joseph Stiglitz of Columbia University, the laureate.
Bloomberg Surveillance. Listen today at Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, shares how we help you consider everything.
In today's ever-evolving environment, the team at Pershing's Prime Services wants to know, what are you focused on now? Are you confident in the stability of your counterparty? Do you feel they can help you grow your business? When it comes to fundraising, do you have access to the mindset of the advisor or have what you need to navigate the ODD process? Exceptional service for our clients is at the core of what we do. Our award-winning team is just one of the benefits of working with BNY Mellon. Whether it's customized financing or securities lending solutions, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your demands, so you can focus on growing your business and producing results for your clients.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC, member FINRA, NYSE, SIPC.
I was in the middle of the Atlantic Ocean when it happened. There was a sudden jolt and our submarine crashed on the seafloor. We were in total darkness.
That's Dr. Dejana Figueroa, a marine biologist and STEM teacher, talking about a deep sea dive she'll never forget.
It's funny, when I was a kid, I was afraid of the ocean, and there I was, 2 miles below the surface. But as a scientist, you prepare for that. Using our training and a little creativity, we fixed the sub and finished our experiments. The dive was just too important. Every dive gives us glimpses at things few people ever get to see. Glowing creatures, fiery undersea volcanoes. When we got back to the surface, I kissed the ground and called my mom, of course. But you know what? I wouldn't trade that dive for anything.
Dr. Figueroa uses her passion for STEM to discover new things and make the world a better place. She can STEM, so can you. Check out She Can STEM for more stories and inspiration. A message from the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers. If trying to figure out the future of your business is keeping you up at night,
are you seeing it come back at all?
At least you have company.
You're hoping to get political pressure.
Do you expect the euro to strengthen? Why even have this hearing?
Bloomberg Radio. Bloomberg. The world is listening.
For example.
Broadcasting live to London on DAB Digital Radio. To New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak Europe.
And it's 8:30 a.m. here in Paris, 9:30... Sorry, we're in London, aren't we? 8:30 a.m. in London, 9:30 a.m. in Paris. Good morning. I'm Caroline Hill.
Travel on the mind, Caroline, huh? I'm Danny Berger. You're listening to Bloomberg Daybreak Europe. Let's quickly whip some through of this morning's market action. We are looking at a more positive day in this cash equity trading that's been underway for about 30 minutes. You're looking at a stock 600 that's up 0.6%. Leading the gains there, some of the larger cap stocks, also UK stocks, doing pretty well this morning as well. A little bit of underperformance from the FTSE Mid, but it's still up 0.5%. So still a mostly positive day. In terms of U.S. futures, those are higher by more than 0.5% as well. Tech leading the way, and that's thanks to a move lower in yields yesterday. I have to say a little bit of that is reversing. We're looking at a 30-year yield that's up about 3 basis points. So we're looking at curve steepening today. Yesterday, we had that CPI data, inflation beating expectations. Is it transitory? Perhaps not anymore, that there is some stickiness to this inflationary picture. But we did see some flattening yesterday. Again, as I say today, some of that is reversing. In the currency space, you're looking at a weaker dollar, again, going head to head with that steeper yield curve. Outperforming is cable this morning. That's up 0.3% at 136.96. And again, the big market movers continue to be the metal space. LME copper up 2%, and WTI crude up 0.8% over $81 a barrel, Caroline.
Yeah, you've got lots of Bank of England speakers to watch out for today as well. Tenrero, Mann and Cunliffe all speaking later on today. Well, let's go to our top stories and actually start here in Britain with the energy market issues. Glencore-backed UK gas supplier CNG Group has announced that it will no longer provide gas to its utility clients. CNG supplies wholesale gas to utilities who then sell it on to households. The move could well push more retail suppliers out of business. Pure Planet, BP-backed, and also Colorado Energy announced their closures on Wednesday.
Well, staying here in the UK, 8 out of 10 companies struggled to recruit last month. That's even as many of them increased wages. According to a survey of the British Chamber of Commerce, the hiring difficulties are more acute in the catering and hospitality sector, where 92% of companies reported difficulties.
Meanwhile, finance ministers from around the world have endorsed a global tax overhaul. 136 governments have earlier reached a deal about the minimum rate to be set at 15% for corporations. Plans for digital taxes, though, have been scrapped after the US said that they were discriminatory. So now the stage is set for G20 leaders to approve the agreement at a summit later this month.
And finally, Caroline, the lira has dropped to a record low against the dollar after Turkey's President Erdogan fired 3 members of the central bank's rate-setting committee in a midnight decree. Bloomberg understands the changes rid the committee of members who disagree with Erdogan's calls to continue cutting interest rates.
Yeah, the Turkish lira currently at 9.14, so soft to 0.6%. Those are some of our top stories for you. Let's get to one of our exclusive interviews. Banco Santander's chairman Anna Botín says that she believes inflation pressures are linked to the pandemic and they are transitory. But speaking to Bloomberg's Francine Lacroix, she did urge caution. Have a listen to that big interview.
You know, there's a lot of talk, and this is linked to the big issue in financial markets today, which is inflation, which is this a temporary issue? And I believe it is, in the sense that, you know, COVID is a one-off and it sort of created a spike, but, you know, US, China already ahead of where they were pre-COVID. Europe will be there in Q1. And so I do think energy is a factor, but hopefully it's part of the broader picture of how do we green the economy at a cost that we can afford and that is fair, and where the cost is borne by everybody in a fair way.
And you have a great snapshot of the world because you have an overview of the emerging markets, of the UK, of Europe, of the US, of Asia. What worries you about what we're living through at the moment economically?
So first, let me say the positive. Okay. You know, we're in a much better place than a year ago. You know, 6% global growth for this year, 4% for next year. That's IMF latest predictions. It's actually pretty good. And so I think that is one thing. The other is, of course, governments, especially in the developed world, were very much you know, in a timely way, making sure that businesses survive. And so I think those are very positive signals. The other one is, of course, there's been a huge amount of savings. I mean, Spain, for example, in 2020 increased savings by 110 billion. That's almost 10% of GDP. On the risk side, what happens with the excess government debt? What happens when businesses and people are taking off life support? Do they go back to being, in a regular situation and able to cope? Is inflation temporary? Those are the issues we need to tackle.
And that could mean that we could see zombie companies? Or again, what are you hearing from clients? Like, as you travel around the world, what should we be focused on? And what should leaders be focused on?
Well, the same issues as before. I mean, I think one of the things we all have to manage, and we were already doing that, is how do we approach customer behavior that is radically different? 50-year-olds and anybody above that age had a hard time banking on the mobile. During COVID, a lot of people have actually had to do it because they didn't want to go out of their homes. And so, how do we bring people along that digital transformation? How do we ensure that, everybody has a chance in the new economy? I think those are the big issues, responsibility of business. For us, it's climate change and financial inclusion. Those are the two big areas we've decided to focus as a company. And I think each company has to choose where they want to have most of an impact over and above their business impact, right? Creating jobs and serving customers.
I mean, right from the start, actually, as a big banking chief executive, you were one of the first ones to talk about digital transformation, about fintech companies. How do you see Santander operating with fintech? Are you creating a lot inside? Would you be looking at buying? How does it pan out in the next 4 years?
We're quite different from others in the we have in-market scale and global scale. And so our global scale is 150 million customers. In 2019, I think with you here in London, we said we'll be investing 20 billion over the next 4 years in technology to make the transformation. We very much believe we need, and we had decided to work along three verticals or three strategic, priorities. One is what we call the One Santander. How do we make a single global platform that is at the same time able to compete locally? Again, 150 million customers across Europe and the Americas. The other one is our PagoNext, which is our global payments company. Yeah. And then we have the digital consumer bank. So we're going to both do it inside the bank and also within an autonomous payments company that we believe can be one of the top 10, 15 global payment companies in the medium term.
Really fascinating interview there with Banco Santander's chairman Anna Mortin, speaking exclusively to Bloomberg's Francine Lacqua. Do I need to remind you, Santander, 1.57 trillion euros in assets across Spain, the UK, Brazil and the US. So really interesting to hear her views on inflation. Right, let's get over to Bloomberg's Leanne Gerrans, who's standing by with all the world news. Hi, Leanne.
Caroline, good morning. The UK government says it will consider EU proposals to ease Northern Ireland's trade issues seriously and constructively. Yesterday, the European Commission unveiled its plans, which would see a reduction of up to 80% in checks on some goods arriving from Great Britain. It would also see customs paperwork cut by half. Brexit Minister Lord Frost is optimistic about the state of negotiations.
We need to find arrangements in Northern Ireland that work to support the Good Friday Agreement, and that means all its dimensions, east-west, north-south. We're asking everyone to be flexible, find compromises, look at things in a different way.
Meetings will take place in London later between the EU and the UK. Here in England, coronavirus infections are high and rising among children. Bloomberg's Pooja Kondia has more.
Prevalence of COVID-19 is growing amongst those aged 17 and younger. That's according to the REACT-1 study led by Imperial College London. The reproduction rate in this age group was 1.18, meaning that on average every 10 young people infected are passing it on to about 12 others. Coronavirus vaccines were rolled out to 12 to 15-year-olds last month, but take-up is slow, putting pressure on Boris Johnson's government. Ministers are renewing calls for young people to get vaccinated. In London, I'm Pooja Kondia, Bloomberg Daybreak Europe.
Staying here, 8 out of 10 British companies struggled to find workers last month, even though many are increasing wages. A survey by the British Chambers of Commerce found that labour shortages are indeed getting worse. It forecasts that consumers will see further reductions in both goods and services. And the World Health Organization has proposed a new team to lead an investigation into the origins of the COVID-19 pandemic. The 26 proposed members of the group were selected from 700 applications and have expertise in a range of areas from epidemiology to biosecurity. A controversial joint WHO-China mission earlier this year found that the coronavirus probably spread from bats to humans via another animal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
145 over 92.
180 over 111. I had a heart attack and a cardiac arrest and then a stroke.
Your blood pressure numbers could change your life. Lowering your high blood pressure could save you from a heart attack or stroke. If you've stopped your treatment plan, restart it or talk to your doctor about creating one that works better for you. Start taking the right steps at manageyourbp.org.
Now I'm, trying to get better, stronger than ever.
Brought to you by the American Heart Association, American Medical Association, and the Ad Council.
The private equity space is more competitive than ever before. Successful transactions require quality, speed, and efficiency. But closing a deal is just the beginning. That's why Witham is dedicated to the entire life cycle of your investment. Private equity investors trust Witham to bring thoughtful financial insights, tax structuring, integration, and cyber risk mitigation to strengthen value creation. Experience the Witham way. Visit witham.com/PE. Witham.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
NJIT makes innovation happen. It also makes entrepreneurs like Anya O'Dwyer. Founder of Innovate, a tech-driven civil engineering and construction management firm, Anya says NJIT is defining the future.
NJIT is extremely important as a hub of disciplines all in one space with all of these brilliant minds. NJIT's role is huge when it comes to defining the future and how, from an interdisciplinary point of view, they have it all there, whether it's the innovation hub, the maker space. NJIT is already creating that collaboration between the disciplines, and you have civil engineers speaking to programmers, speaking to electrical engineers, and together they're creating advancements that we wouldn't have been able to do without those three minds coming together and solving a problem as one rather than solving it in isolation.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Burden LLP Accountants and Advisors presents Tax Chat with Lisa Goldman, partner and leader of Burden's International Tax and Advisory Practice.
If you're a high net worth individual with international investments or a business owner with operations overseas, it is essential to have a tax advisor who knows how to protect your assets on a global scale. Owning and investing in foreign corporations comes with certain tax responsibilities. Burden Accountants and Advisors works with clients to ensure that they understand the intricacies of the global market, maximize the tax opportunities available, and reduce the challenges presented by international tax laws.
If you're a high net worth individual or a business owner, let Burden help protect you, your family, and your business. For more tax chat from Burden Accountants and Advisors, visit burdenllp.com. That's BERDONLLP.com. Burden Accountants and Advisors.
We listen, we solve, we do.
I'm Carol Masser.
And I'm Tim Stenovec.
Tim, we are on the West Coast.
Starting Monday, Bloomberg Business Week is heading to Beverly Hills for the Milken Conference.
We'll be speaking with some of the business world's top minds, including Thoma Bravo CEO Orlando Bravo.
Digital Bridge CEO Mark Ganzi will also be joining us.
And former Secretary of Transportation Elaine Chao.
Bloomberg Business Week, live from the Milken Conference in Beverly Hills. Monday through Wednesday, starting at 2 p.m. on Bloomberg 1130. There are a lot of ways to look at the world right now.
Interesting that you've got an overweight on Hong Kong.
And the more of them you can access, the better.
What has to be his strategy?
Perspective.
Who's doing school best?
Clarity.
How do we get it so that the benefits get to everybody?
Expertise.
He seems to have exactly the right combination. It's character plus policy.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg. The world is listening.
The Alzheimer's Association and the Ad Council present the story of Tom and Levi.
Tom is the smartest man I know. He's been a professor at 2 major universities, been a teacher for over 40 years. One day, he told me that he was having problems in his classes. I think one of the students had asked the question and he didn't remember the answer. And I also noticed that he was letting his class out earlier than they were supposed to let out. And he was telling them that he was doing it as a favor to them, but I think in reality, he just wanted to get out of there. I was really starting to worry because I saw something was wrong.
Levi and I talked about how it would change our lives, but he was there beside me, and my love for him was just immense.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/our stories to learn more. A message from the Alzheimer's Association and the Ad Council.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in the City of London, I'm Max Ramsey with this Bloomberg Radio Business Flash. Just over 45 minutes into the European equities session, and we continue to push higher across the continent. The Stock 600 up 0.6%, the FTSE 100 up around 0.5%, and similar moves higher for the DAX and the CAC 40 in France. Taking a sector view, almost entirely in the green, utilities and healthcare, the only industry groups seeing losses on the Stock 600 right now. Basic resources and tech are leading the gains. We did have a little bit of selling in European bonds this morning after we did get a move lower in European bond yields yesterday, but actually fairly flat right now on the German Bund, negative 0.127 the yield there. The UK 10-year gilt just rising 1 basis point, 1.099% the yield there. Cable a bit stronger today for the pound, $136.92 to your pound. We were broadly positive in Asia earlier. MSCI Asia Pacific up 0.6%. China, the underperformer, down around 0.5% on the CSI 300. Of course, we had that hot factory gate inflation data that did come through earlier this morning. US futures rising today or to the upside for S&P 500 E-mini futures up around 0.6%. Nasdaq futures up around 0.7%. The yield on the US 10-year 154.03. The dollar just weakening a little bit, down around 0.1% on the Bloomberg Dollar Spot Index. Finally, quick check on oil. Strength again for WTI, $81.07 per barrel, rising about 0.8%. That was a Bloomberg Business Flash. Now let's get to Leanne Gerrans for more on what's going on around the world. Good morning, Leanne.
Max, good morning and thank you. Germany's Olaf Scholz says an SPD-led government will drive forward an expansion in renewables and energy infrastructure investment. On a 2-day trip to Washington as Germany's finance minister, he expressed confidence that he'll form a government by Christmas. Now, in Norway, a man's been held for questioning after arrows were fired at shoppers in a small Norwegian town last night. 5 people were killed and 2 others injured, including an off-duty police officer. The attack's been described as gruesome by the mayor of Kongsberg, near the capital of Oslo. And here in the UK, Domino's says its busiest period is still to come, despite 7 pizzas being sold every minute since the start of July. The takeaway chains are looking to hire more than 8,000 new delivery drivers, and that's for Christmas. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg Caroline.
Domino's. Is it one of the ones you might eat?
Well, there's other pizza places available, but Domino's are one of the most popular. I feel like every time I try to cross the road, I've got to navigate a Domino's man on his scooter, which is quite a stressful time. And I know why now, because they're delivering these pizzas every 7 minutes. But I also think that I have definitely been ordering more takeaway. I don't know if you have been, Caroline, since the lockdown.
Yeah.
I think it's a habit that's going to stick with me for a while, but it is just so convenient. So hopefully lots of people will be getting jobs delivering their pizzas.
As a result, yes, exactly. Domino's Pizza's results. Trading remains in line with forecasts. Yes, interesting. Thanks so much, Leanne Gerrans, with the world news for us this morning. Now, European stocks are actually close to their highest in 3 weeks this morning. Earnings season seems to have reassured some investors that the economic recovery is still on track, even if Wednesday's US CPI number beat expectations, 5.4%, and China's PPI has jumped to the highest level in 26 years. Well, joining me now is Mark Ostwald, who is Chief Economist and Global Strategist at ADM Investor Services. Mark, welcome to the show. Thanks for being with me. Look, I think it's staggering that the US stock market is now worth more than the combined economic output of 5 of the world's biggest economies. This is what the pandemic has done to stocks. It's even more extreme than during the dot-com bubble. Can it really last?
Well, I think it's always a case of everything being relative. Given the returns on bonds are so appalling, and are likely to remain very, very low. Even if we start to move towards a less accommodative central bank policy stance, above all in developed countries, where realistically would we put bond yields? And the answer is, well, somewhere where they're still very, very unattractive. And so on a relative basis, equities still remain relatively attractive. But, there are increasingly a lot of challenges on that front. The current level of valuations, and if we were to see a more material rise in bond yields because people actually don't start believing, basically start doubting more materially central banks' inflation view, i.e. the transitory view, then that would prove obviously a lot more challenging for equity markets.
We got the Fed minutes yesterday from the last meeting. Looks like the FOMC on track for tapering as soon as next month. Is that something that you buy?
Yes, I mean, I think that's definitely the path. I think perhaps the more interesting aspect is they're still very cautious about the pace of tapering. I think 15 billion, there were a few members who clearly wanted to go at a quicker pace, which we know from a lot of the Fed speak that we've had. But it indicates a degree of caution there, which I think speaks to their concerns about the overall economic outlook, and rather more that we're not going to see the sort of fall in unemployment that they want to see, which is key for an interest rate hike, and they're not 100% sure about the overall growth outlook. They still obviously see a number of risks out there, which there clearly are. There's a lot of uncertainty. We're not going to get rid of that in any great hurry.
The Bank of England in danger of making an error here. Traders now see interest rates hitting 1% by the end of 2022 next year. We've got a number 3 Bank of England official speaking today. Is the Bank of England on the right path?
Well, is the market on the right path in terms of what it's predicting for the Bank of England is probably a part of that question as well. I think the Bank of England's biggest problem is a lot of the inflation is it's structural. So it's supply side related. There's nothing they can actually do with interest rates to change any of this. And above all, the fact that it's the inflation that we've got in most places around the world is in the 3 key non-discretionary areas: food, energy, housing. The housing part, yes, they could definitely do something about, but purely focusing on that would be very difficult, given that we know, I mean, it's for everyone to see that there are huge structural problems in the UK, as there are indeed in many other places, which have been laid bare, so to speak, by the pandemic. And we're moving into a different world because a lot of the previous processes reliance on globalization, find the cheapest source of goods, is freely available labor. So I think the Bank of England, yes, I think withdrawing the QE, what's left of it, which is not very much in any case, definitely a rate hike probably needs to be, there needs to be a lot more caution about that, because as much as there are a lot of vacancies and there's been fairly some decent numbers in terms of payrolls, the HMRC payrolls numbers, there's still quite some way from going back to the employment levels that we had before, and we still have to actually see what the impact of the ending of the furlough scheme actually is.
Yes, absolutely. The end of September for the furlough scheme. One other big market story this morning, Mark, which is the metals rally. And you can sort of see it, can't you? Energy crunch feeds into supply crunch, feeds into inflation crunch. Is that the picture as you see it? And where do we go for metals? Is it just, further to run in terms of gains?
Well, a lot of it, in terms of the metals, is actually a lot to do with the disruption in China. So you've got the flooding of the mines, you've got an extreme weather, basically, situation. You've got the power crisis that they have over there, which is similar in many respects to what everyone else has. And so people are looking at it and saying, well, basically, particularly things like aluminium, China is a major producer, and we are, whatever the pace of the recovery, it's still basically a V-shaped recovery, and we're going to get a supply chain, a supply shortage because of this disruption that you're seeing in China. My only problem with all of these squeezes that we're seeing, at some stage there will be some form of normalization, and at the moment I can't help but feel that part of the rallies in these markets is a typical market momentum trade. It's paper chasing metals prices rather than necessarily producers. But producers are obviously in there needing to source raw materials, but how much of it is actually very speculative, and when things normalize, may they tail off quite sharply.
Yeah, we'll see. Mark, thanks so much for joining me. Really good to have you on the radio programme this morning. Mark Oswalt is Chief Economist and Global Strategist at ADM Investor Services. Well, on that note, I will leave you with a data check for this hour, as European stocks are up 0.7% this morning. So we're very much in the green. FTSE 100 up 0.6%. Keeping an eye on the Turkish lira after, again, another surprise decision from the Turkish Prime Minister Recep Tayyip Erdogan. The lira at 9.13. So slumping another 0.5%. Futures for the US market open. S&P 500 E-mini futures are up 0.5%, and US benchmark yields on the 10-year at 1.54%. Anna Edwards, Tom McKenzie with you for the next hour. This is Bloomberg.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to the real-time financial news, data, and analytics that can take your workflow to the next level. Power up at Bloomberg.com/professional.
If you're having a business dispute, the process can be slow and drawn out, especially if you rely on litigation in the courts. You can wait for years before your case is resolved, and the longer your case proceeds, the more your case can cost. Not with the American Arbitration Association. Arbitration or mediation with the American Arbitration Association is faster. In fact, nearly 50% of our cases settle prior to hearings. ADR.org. Resolve faster.
For the Jewish Communal Fund, past president Noel Spiegel.
People often ask me why it's important to use JCF for their charitable giving. I tell them that JCF has a profound impact on our community. Thanks to the revenue generated from our funds, JCF makes an annual $2 million grant to UJA Federation of New York and makes grants from our endowment, the Special Gifts Fund. This year, we proudly granted more than $800,000 to support a kosher food pantry at Mid-Island YJCC, Jewish Jewish daycare at the Ed Alliance, a renovation at Camp Oakhurst, and an intergenerational Holocaust program at Ramaz. I'd like you to hear about our impact from a past Special Gifts Fund recipient.
Plaza Jewish Community Chapel is most grateful to JCF for supplying seed money to start the organization. Almost 10,000 families have relied on Plaza to provide an affordable yet dignified Jewish funeral.
Let JCF maximize your impact. Visit jcfny.org or call 212-752-8277.
Broadcasting 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and at Bloomberg Quick Take. This is Bloomberg Radio.
This is Bloomberg Daybreak Europe.
We expect economic activity to accelerate in the second half of this year.
ECB is probably waiting until the autumn for a potential first adjustment.
The national approach has been working when it comes to restrictions.
Economists are warning that there can't be a national recovery without a London recovery.
This relationship between the US and the UK, it's strong, it's got very, very deep roots, it'll stay strong.
Bloomberg Daybreak Europe on Bloomberg Radio.
Good morning from London. I'm Anna Edwards.
And I'm Tom McKenzie. You're listening to Daybreak Europe live on London DAB Digital Radio.
Good morning, everybody. Welcome to the programme. A couple of red headlines just crossing the Bloomberg, so we'll get to the data in just a moment, but just want to bring those to your attention because they're topical. When we think about the threat of stagflation, many people say we're not heading for it. Some say we are. The German institutes cutting their 2021 growth forecast to 2.4% versus 3.7%. So that's a big downgrade from them in terms of their growth expectations for the German economy. Does that play into the sort of stagnant part of the stagflation debate? And then when we look at the inflation side of things, the IEA, the International Energy Agency, putting out a report, gas to oil switch may add 500,000 barrels a day to demand over the next 6 months. So that's interesting in the context of rising oil prices. We've seen the Saudis and the UAE speaking about higher oil prices today, but justifying them, suggesting that they're not. We haven't seen as much inflation in oil prices as we've seen in other energies, other commodities. So that is interesting. Does that suggest they're not in a hurry to hike output? And that is top of mind, really, because we see oil prices moving to the upside once again. The Brent price above $84 a barrel, up by more than 1%, and the WTI price, 81.23, up by around 1% as well. So we are seeing movement to the upside, and really a focus in the last, weeks, months. I can't remember a time we weren't focused on the inflation story, but it certainly, post-pandemic, has become a dominant narrative. We had US inflation above 5%. We've had 26-year high in factory gate inflation in China, all of that leading us to focus, at least thematically, still on inflation, but risk assets still gaining because of the amount of liquidity in markets, we're told by investors. So the stock 600 up by 0.75%, the FTSE 100 up by around 0.7%, the CAC 40 up by 0.6%, the DAX up by 0.6%. So strength across equity markets, and US futures point to the upside as well, up by between 0.5% and 0.75% on the major indexes. Despite the focus on inflation, we did see some adjustments in the 2-year, bringing forwards those rate increase expectations in the United States. So that means the 10-year yield drops a little. 1.53 is the handle there. The dollar is a little bit weaker this morning, and the Turkish lira down by 0.5% after change at the central bank. Tom.
OK, let's unpack the stories driving some of those market moves then with MLive's strategist Ven Ram. Ven, what is then, to Anna's point, what is driving markets higher in spite of these very significant inflation prints that we've been getting out of China and the US, and the Fed minutes essentially locking in taper either November or December?
Well, I mean, the taper itself is nothing new. I mean, the markets, the Fed has warned us about the oncoming taper for a long time now. So that in itself is not a driving force for the markets anymore. Obviously, inflation is a big concern, but what we have seen is that inflation expectations have kind of leveled off. They are not, they are elevated, and they've been bobbing around a range. They are not pulling away yet. It's happening big time in the UK. It's a different story in the UK where it's happening big time, and that's why we've seen gilt yields surge recently by more than 40 basis points in the space of a couple of months. That hasn't happened in the US simply because inflation expectations seem to be relatively contained, albeit elevated.
Yeah, thinking about those inflation expectations then, Van, good morning once again. We've got oil prices moving a little bit higher. What kind of movement in oil prices, or do we have to just see this continuing to move higher towards $90, towards $100 before the markets become transfixed on this again?
Well, I definitely oil prices are going to be one big component of it, and if we also want to see how inflation holds up after the base effects of this year wear off, and if we see those CPI prints in the U.S. holding up after the base effect wears off, if we see those prints elevated, then I do think that the forward inflation swaps will find the next leg higher, and that in turn will propel yields higher in the U.S.
Then earnings season is upon us, of course. We had the results from JP Morgan yesterday. We've got some of the other big banks, Bank of America, Citi, Wells Fargo later today. What specifically are you going to be focused on when it comes to the earnings pictures out of these corporates?
Well, I mean, the S&P is at the moment trading on very lofty earnings growth estimates. I mean, $200 to $220, depending on which forward metric you're looking at. So that is a pretty steep hurdle coming off the pandemic. So it's not clear how many of those earnings estimates will be matched. And if they are matched, then well and good for the S&P, because at current Treasury yields, I think that the S&P, even though elevated, may find some support. But if there is a nasty earnings surprise on the downside, I do think that S&P stocks will feel the pinch, especially because they've been wobbly off late, as we've noticed, and we have seen multiple one standard deviation plus moves in the past month, and that reflects the skittishness of the markets.
Ven, thank you very much. Bloomberg's Markets Live strategist, Ven Ram, thank you very much for joining us this morning. Let's turn our attention to one of the other topics that is really grabbing the headlines this morning, certainly here in the UK, and that is the post-Brexit news. The EU and the UK are braced for a new round of negotiations over trade barriers in Northern Ireland. EU negotiator Maros Sefcovic voiced optimism the two sides will reach an agreement in coming weeks after unveiling adjustments to the Northern Ireland Protocol that would slash customs checks and cut sanitary inspections on goods including ham and sausages. Joining us now is UK government and Brexit reporter Joe Mays. We heard from David Frost earlier on in the week, then the former Brexit negotiator here in the UK, Joe. We've heard from him. We've also then heard from Maros Sefcovic. After we heard from Lord Frost, there did seem to be a slightly more cooperative tone on both sides. Maros Sefcovic sounding optimistic and David Frost saying that they will look at these plans seriously from the EU. Is there room for optimism that a path forward can be found?
I think there perhaps is. I mean, the mood music, like you say, is towards being in the appetite of getting towards a deal. I mean, Lord Frost was saying they're going to look very positively, constructively, what the EU has put forward. He was even saying, we managed to get to a deal on the trade agreement last year, so we can do it again this time round. And yes, the EU has really moved quite significantly here. It has offered a significant concession to the UK in terms of markedly reducing customs checks on goods crossing the Irish Sea, easing the movement of medicine, reducing lots of the paperwork. So that's a big move. But we haven't seen them offer a concession on oversight of the protocol, and that's the role of the European Court of Justice, and that will be probably the big sticking point in the negotiations. And the UK so far seems to be saying we want no role at all for the ECJ in Northern Ireland, and that's a pretty big ask for the EU side.
It's a big ask indeed. Is that ultimately where things could come apart then? And if so, what are the next actions or steps we should be looking for from both Brussels and London?
Yeah, that would be the area. I mean, there is some reporting in the British press this morning saying that we might get to kind of compromise where there is an independent panel that oversees the protocol with some limited role for the ECJ. Would the UK accept that? Who knows? But if it does break down, we're essentially in the realm of retaliatory tit-for-tat measures. So you could see the EU putting tariffs, for example, on sensitive UK industries, restricting access in financial services, and the UK perhaps completely doing away with any customs checks at all across the Irish Sea, which would put the EU in a bind. Would they then be willing to put up a border on the island of Ireland or between Ireland and France? Who knows? So it could get very messy if this doesn't work out.
We spoke earlier to our bureau chief in Brussels, and there seems to be a view there that perhaps some of this is surfacing now because of trouble politically, domestically in the UK for the government. I mean, still have a big majority, but trouble in the sense of all the negative headlines around queuing up for fuel and supply chain issues. Some of them global, some of them very much UK. Joe, what's the sense? What sense do you have as to why this is resurfacing now?
Yeah, I mean, it's always pretty politically useful to have an external enemy if there are domestic problems in your country, and you see why there's therefore perhaps a political incentive to keep UK-EU tensions bubbling away, especially from the side of Boris Johnson. I think also we have COP coming up, so that's why I'd expect no real further breakdown in relations until that summit's finished, because the UK wouldn't want to burn any political capital with the EU when it needs its help on climate change. But yeah, I think you're right to say that there is a lot of domestic political pressure in the UK because of other matters. It's nice to have this row bubbling over the EU for sure.
OK, UK government and Brexit reporter Joe Mays on the latest in terms of these negotiations between Brussels and London over the Northern Ireland Protocol. Let's get the rest of the global news now with Leanne Gerrans. Leanne.
Tom, good morning and thank you. And we start here in the UK, where trade associations and business leaders have backed calls for an urgent review to business rates. Bloomberg's Ewan Potts reports.
The CBI and 41 other organisations have written to Chancellor Rishi Sunak to say that companies should be exempt from business rates for investments in emissions-reducing machinery. The groups argue the current system actively discourages business investment in decarbonisation. In the statement, they say that a reform could help boost investment in green initiatives. But the Telegraph reports Sunak is unlikely to make major changes in his upcoming budget due in less than 2 weeks' time. In London, I'm Ewan Potts, Bloomberg Daybreak Europe.
In England, GP surgeries that do not offer enough face-to-face appointments will be unable to access new funding under plans announced this morning. It is part of a new package of measures to improve services and has been backed by £250 million. Those that fall short will instead be given an improvement plan. Now, Germany's Olaf Scholz says an SPD-led government will drive forward an expansion in renewables and energy infrastructure investment. On a two-day trip to Washington as Germany's finance minister, he expressed confidence that he will form a government by Christmas. Speaking to Bloomberg TV, he also weighed in on Europe's energy crisis.
There are a lot of prices that increased for oil and gas, for instance, which is also due to the economic recovery we see worldwide and some other reasons. But so far, all the experts tell us that in the next year we will have a normalization of price inflation again.
And the World Health Organization has proposed a new team to lead an investigation into the origins of COVID-19. The 26 proposed members of the group were selected from 700 applications and have expertise in a range of areas from epidemiology to biosecurity. A controversial joint WHO-China mission earlier this year found that the coronavirus probably spread from bats to humans via another animal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Anna.
Thanks very much to Leanne Gerrans for the World News Update. Let's get an update now on sports news. Here's George Alderman.
New Watford manager Claudio Ranieri insists he still has plenty to offer as he approaches his 70th birthday. The Italian, who led Leicester to the Premier League title in 2016, will reach the milestone next week. He's been brought in to keep Watford in the top flight. Chelsea have their first win of the Women's Champions League group stages after claiming a 2-1 victory over Juventus last night. The result in Turin leaves last season's runners-up with 4 points from their opening 2 games. Arsenal look to bounce back from a 4-1 thrashing by Barcelona when they host Hoffenheim tonight.
Thanks very much to George Alderman for that. Tom, European equity markets doing pretty well despite these inflation concerns then.
Yeah, you got the Stocks Europe 600 up almost 0.9%. Solid gains across the UK, France, Germany, Italy. Part of this, of course, is investors looking at the earnings picture and trying to walk through, or at least look through some of those inflationary pressures. As Sven Ram was saying, the inflation numbers are high, but they haven't moved significantly higher beyond forecast. So maybe that is part of the reason. But as you say, yeah, solid gains so far. An hour and 10 minutes, 13 minutes into the session.
Yeah, what do you need to move from high to higher still? Yes. That maybe is the next part of the conversation on inflation. Now, still ahead on Bloomberg Daybreak Europe. I mean, one of the things driving inflation is energy prices. So we'll return to that theme. This week we've heard from Russia, of course, Russia pledging to deliver as much gas as Europe needs as Vladimir Putin blames the region's energy crisis on flawed policies and a lack of investment rather than a lack of Russian supply. We'll discuss those lines that we heard from Russia this week. We'll also reflect on what we've heard from Saudi Arabia, talking about how the increases in oil prices have not been as great as gas and coal, and so perhaps suggesting there isn't the appetite to boost supply there. More on that with Bloomberg Opinion next. This is Bloomberg.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to real-time financial data, market-moving news, powerful analytics, and an influential network of financial decision makers around the world. Share ideas, negotiate trades, and gain the insight you need to make more informed decisions. See how the terminal can take your workflow to the next level at bloomberg.com/professional.
It's the true value of your custodial relationship. Ben Harrison of BNY Mellon's Pershing explains.
As sophisticated investors demand more from their advisors, advisory firms in turn need to rely on their custodian to help them grow their complex businesses. At BNY Mellon's Pershing, supporting the rapid growth of RIAs is our #1 priority. We understand what it means to deliver true value to our clients who are looking for a custodian that is aligned with their best interest and delivers high-value solutions, all in an open architecture environment with flexibility, choice, and transparency. Learn why so many of the largest advisory firms turn to us for the financial strength, resiliency, and high-touch service that BNY Mellon Pershing provides. When you work with Pershing, we put your business first. Can your custodian say that?
Learn more at Pershing.com or call 800-445-4467. Pershing Advisor Solutions, LLC. Member FINRA SIPC.
When the market is unpredictable, BAM gives you certainty. In the face of market volatility and illiquidity, BAM insured municipal bonds deliver default protection, value preservation, and a durable AA rating from S&P. BAM's insurance protects against everything that causes a default, including natural disasters, financial fraud, pension issues, and economic disruption. So while America rebuilds, BAM has you covered. BAM. Build America Mutual. Talk to your investment advisor or visit buildamerica.com.
Okay, man. This is your time. Maybe you didn't choose this, but you're here now. You're gonna go out there and be an all-star caregiver. Cook, clean, be there emotionally and physically. You gotta dig deeper. Drive them to physical therapy, doctor's appointments, because that's what caregivers do. Don't give up. Show the world that you're tougher than tough. Caregiving is tougher than tough. Find the care guides you need at aarp.org/caregiving. Brought to you by AARP and the Ad Council.
Influential conversations from Bloomberg Television. Here's Danny Berger.
Well, let's dig more into this inflation conversation. Pleased to say joining us today is William Hobbs, Chief Investment Officer at Barclays Wealth and Investments, here next to me in the London studio. So on this inflation, this transitory debate, we're looking at a 2-year paper with yields at a 19-month high. We clearly have the Fed still debating this issue of transitory, but are the markets still debating it? Have we moved on from this transitory issue? Is it here for a little bit longer?
Yes, God, it's a good question. Multiple fines for uses of transitory and stagflation and so on. But
get the jar out.
Yeah, get the jar out. But no, it's. I mean, the interesting thing I think is you're seeing the sort of the incremental central bank communiques start to talk about the upside risks to inflation, and transitory starting to be de-emphasized a little bit. But from our perspective, the real problem is that obviously what we've got to watch is how this current hump in inflation, and it's a bit longer than everyone expected, starts to seep into our collective consciousness. And that collective consciousness is not very easy to measure in reality until it shows up in wages. And wage data is just so noisy at the moment. There's very little signal in amongst that noise, in our opinion, which makes the story quite difficult to judge. I mean, we still think that it is a hump, not a sort of new trend, but I think the bond market is definitely right to be adding a little bit of compensation at the long end in particular.
Hear more conversations like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in London, I'm Anna Edwards with this Bloomberg Radio Business Flash. European equity markets moving higher this morning after gains on Wall Street and gains in Europe yesterday, and then we saw gains through the Asia session as well. So despite the focus on inflation, the above 5% rate of inflation in the United States, a 26-year high in factory price inflation in China, despite all of that ongoing inflation concern and higher oil prices, we still managed to make gains on risk assets. So the Stock 600 up by 0.8%, the FTSE up 0.7%, the CAC 40 pounds up 0.7, and similarly for the DAX. The DAX up 0.7%. So moves to the upside. US futures also moving higher by between 0.5% and 0.9% on US equity market futures right now. Oil prices are moving higher as well, as I mentioned. 84.11 is where we trade on the Brent price, up by 1.1%. The yield picture on the US Treasury markets is interesting. We've seen a lot of movement at the short end, flattening of the curve in response to the CPI numbers, bringing forward rate hike expectations, which actually means we see a drop in the yield at the 10-year horizon, 1.53%. The dollar is a little weaker, down by 0.25%. The Turkish lira also down by 0.4% after we saw President Erdogan taking further action at the central bank. But the Turkish lira is off its session lows. That is a Bloomberg Business Flash. Now here's Leanne Gerrans with more on what's happening around the world.
Anna, good morning and thank you. The EU and UK are braced for a new round of negotiations in London over the coming days over trade barriers in Northern Ireland. That's after Brussels unveiled a set of proposed adjustments to the trade protocol that would slash customs checks in the territory by half and cut sanitary inspections on many retail goods by 80%. The British say the existing agreements are just unworkable. Now, police in Norway are considering if an incident that saw 5 people killed and 2 injured in a bow and arrow attack was an attack of terror. The assailant is suspected of acting alone when he walked around shooting in the centre of Kongsberg, a town about 1 hour's drive from Oslo. Police say officers around the country will be temporarily armed as a result of this incident. And the Chancellor Rishi Sunak is insisting the government is doing everything it can to make sure supply issues are fixed, and says he's confident there will be enough Christmas presents to go around. Toy manufacturers have gone against ministers to encourage parents to shop early this year. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
It is 9:20 in the City of London. Time to check in with Bloomberg Opinion. We're joined by opinion columnist and oil strategist Julian Lee, who's joining us to discuss Russian President Vladimir Putin's pledge to Europe yesterday, a pledge that essentially entailed Russia promising to deliver as much as Europe needs. Julian, key question, can we trust Vladimir Putin on this question?
Yes, I think we can, with a large number of caveats around that. I mean, the first thing that Russia needs to do, and the first thing that Russia will do, is to replenish its own storage before it starts worrying about storage in Europe. We hear a lot about European gas storage levels having been drawn down very low after a long cold winter last year and not having been rebuilt as quickly as they should be. But exactly the same thing happened in Russia as well. Their storage normally gets down to about 30 to the 40% of capacity at the end of winter. This year, at the end of the last winter, it was down at 17% of capacity. So, they had very low storage levels as well. They're rebuilding those. They should be rebuilt to comfortable levels by the end of this month. And after that, I think Russia will be in a position to boost its shipments to the rest of Europe.
That's interesting, Julian. I mean, where are we on the price story here? I was looking at Dutch gas prices, which seems to be something of a European benchmark for the industry, surging back above 100 euros. And I was thinking, well, that's not 160. That's where we were earlier on this year. But compared to where we were just last year and the years before, these are really high levels for gas.
Yeah, they are extremely high, and they reflect the very low storage levels, the concerns as we head into winter in Europe, and the competition that European buyers are facing from Asia and elsewhere for supplies of liquefied gas. And one of the problems that Vladimir Putin is very quick to point out is that Europe, over the last 5 to 10 years probably, has moved away from the sort of long-term contracts for gas that Russia has always preferred. And these have been contracts of 15 to 20 years duration with a price that is linked to oil markets and other competing energies that really ties Europe and Russia together. As we've seen the sort of market liberalization in Europe, the continent has moved much more towards short-term contracts, prices based on exchange trading of gas itself, and this has to some extent broken down this relationship with Russia. Russia's very quick to say that it has provided all the gas that it has contracts for in Europe. That's certainly true, but those contracts now supply a much smaller proportion of European gas needs than they did a decade ago.
Julian, just very briefly, we had some lines out from the Saudi oil minister seemingly suggesting that there's no rush to increase supplies. What should we make of this?
I think, the report we saw from OPEC yesterday, taking a very cautious line on oil demand through the winter. I think they are still erring on the side of caution. At the moment, they don't seem to be responding to suggestions that we need more oil from them in the short term than they are already planning to produce. And unless something changes in their mindset, I think when they meet again in 3 weeks, 2 or 3 weeks' time, we will see another agreement to increase by 400,000 barrels a day as previously planned.
Bloomberg opinion columnist Julian Lee, thank you very much indeed. We've got plenty more ahead, including digging into the earnings of all-important semiconductor maker TSMC. This is Bloomberg.
With a Bloomberg Business of Sports report, I'm Michael Barr. The NFL says it won't release any more emails related to the investigation into the Washington football team that revealed now former Las Vegas Raiders coach John Gruden's use of racial and homophobic slurs in emails. Gruden is now losing a sponsorship deal with Skechers. DraftKings and the NHL are strengthening their bond. According to Sportico, the Boston-based gaming operator announced a new partnership with Turner Sports to be the exclusive sports book for the company's new NHL coverage. Brooklyn Nets star Kevin Durant and Qualtrics co-founder Ryan Smith are among investors backing ticketing platform SeatGeek's merger with blank check firm Red Bull. Durant's 35 Ventures and Smith have agreed to invest in the deal alongside institutional investors, including venture capital firm Accel. And that is a Bloomberg Business of Sports report. I'm Michael Barr, brought to you by Exergen. In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Is it time to pivot? Commonwealth Financial Network can help you recognize when you've reached an inflection point in your business. Whether you're a solo practice that's slightly overextended or a multi-advisor firm looking to improve integration. For more than 40 years, we've provided advisors the support they need to position themselves for continued growth and success. Visit Commonwealth.com today and propel your business forward. Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seizechange.
What I know about courage,
I learned from my adoptive mom. She said sometimes you just gotta hold on and know we'll get through this. Mom, we are so high up. Hold my hand.
No, you hold my hand.
Here we go.
Learn about adopting a teen from foster care. You can't imagine the reward. Visit adoptuskids.org to find out more.
I learned patience from my adoptive dad. All he had to say was,
"Hey, you got this. Just breathe." Hey, we're pretty good.
Yeah.
Might have to start a band.
I got it.
Learn about adopting a teen from foster care. You can't imagine the reward. Visit adoptuskids.org to find out more. This message is brought to you by Adopt US Kids, the U.S. Department of Health and Human Services, and the Ad Council.
When yesterday's business triumph can be undone in a matter of hours, it's not just how much news you can access.
The pipeline is returning to service.
It's how fast you can get it.
Maybe the times are changing a little bit.
Nathan Hager and Karen Moscow.
It needs aggressive support to speed the healing process.
Bloomberg Daybreak, weekday mornings at 5 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. When we say Bloomberg brings you the latest financial and business news anywhere, we've actually given the matter quite a bit of thought.
Let's get now to our guest joining us from Bangkok.
She joins us on the phone from the Hudson Valley.
Bloomberg Radio. Bloomberg. The world is listening.
Broadcasting live to London on DAB Digital Radio. To New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak Europe.
It is 9:30 here in London, 10:30 if you're in Paris or Berlin. I'm Anna Edwards. A very warm welcome to the programme, everybody. You're listening to Bloomberg Daybreak Europe. We check the markets every 15 minutes here on Bloomberg Radio through your trading day. So let's do that. We've got European equity markets, well, putting aside concerns around inflation, it seems, for the day at least, up by 0.9% on the Stoxx 600. The FTSE 100 up by 0.8%. The CAC 40 up 0.7, as is the Xetra DAX. The IBEX, the FTSE MIB, also making decent moves to the upside. US futures also point higher, this after yesterday's gains, after gains in Asia, and this despite the fact we have a higher than 5% print on US CPI. We have a 26-year high on factory gate inflation over in China. The market not distracted by that today, it seems, and moving higher. In terms of oil prices, they also add to the inflation narrative, or they could do. 83.96 is the Brent price. It has been above $84 a barrel this morning. The yield story is an interesting one. Perhaps it's the fact we've got a little respite from higher yields on the US 10-year that is messing with the market psychology a little bit. We saw some of those rate hike expectations brought forward. We saw a flattening of the curve in response to the CPI data out of the United States. 2-year yields went higher, 10-year yields less so, and in fact 10-year yields lower now than they were this time yesterday, 1.53%. The dollar is a little weaker this morning, down around 0.2% on the dollar index. The Turkish lira also down by 0.4% due to some changes by the president at the central bank. So that's a quick look at where we are on the markets this hour. Now, coming up in around 25 minutes time, we will have on London DAB Bloomberg Surveillance, the early edition. Matt Miller, Kaylee Lyons and Francine Lacroix will be in the hot seats. And Matt joins us from Berlin. Good morning to you,
Good
Matt.
morning.
And I always look forward to our conversations. What on earth is on your mind this morning?
Well, on my mind, there's so much news out of Europe that I find fascinating, starting with Turkey. As you mentioned, we're seeing an all-new record low for the lira. I'm wondering if we're headed to double digits at some point in the near future. And then you've got the UK gas story, which is nonstop.
Just keeps on giving.
One more wholesale provider out of business, and that's going to leave probably a lot more retail providers out of business and a lot more Brits without gas, scrambling to look for a new provider. But I think in the larger picture, globally, it's just an amazing story. And Vladimir Putin now says he can come in and help, and
yes,
in a sense, he wants to be the white knight.
We saw a bit of reaction, didn't we, to Putin's comments on that front just last week. We saw gas prices came down really quite aggressively on the back of those, but they just started to tick up again. I saw the Dutch price, which seems to be something of a benchmark for Europe, climbing back above 100 just in today's session. But just to allay any fears, I don't think we're going to be scrammed. I think you get automatically reassigned to a new provider. I think that's the way it works in the UK
until
context,
there aren't anymore,
just
right?
in case you care over there in Berlin.
Or until it's just way too expensive for, the average a person to afford. Of course, it's a regulated market, so there will be workarounds, but it still provides plenty of fodder for market action on both sides of that trade. We've got a great guest. David Stubbs joins us, J.P. Morgan Private Bank, Head of Investment Strategy. There's a lot out of the U.S. to think about today as well. President Biden is trying to come up with an answer to the supply chain problems at the same time as he's still trying to get his infrastructure bill passed and raise taxes. At the same time, you've got the inflation picture, which, almost like the natural gas story, they're on the same track. It just does not stop. We had new the highest level CPI year over year print that we've seen since 2008. And then we've got T-Mac. He's kind of the star of the back half of our show because he's at the All-Star, Tom McKenzie, of course, your erstwhile co-host, at this All-Stars investor event in London. He's going to talk with the CEO of Molly, which isn't what it sounds like. It's actually a payments company, although the name, I think, is suspect. And then he's going to talk to EQT partner Carolina Brocato. That's going to be an interview that you don't want to miss. So definitely tune in for more from Tom McKenzie.
We will do. We will look forward to that. And I'll point you in the direction, Matt, of a story from the Bank of England yesterday from John Cunliffe about cryptos. I don't know if you saw this. He says the crypto market is now double the size of the subprime debt market on the eve of the GFC, of the financial crisis. There are parallels. There are not parallels. Ongoing conversation, no doubt. We will talk about that another time. Matt Miller, thank you very much. And you can catch Matt, of course, on Bloomberg Surveillance Early Edition up next here on London DAB Digital Radio. And for our US listeners, you can catch Matt and Paul Sweeney hosting Bloomberg Markets at 10 a.m. Eastern Time. So that's a look at what is coming up next. Let's focus on the earnings story and where it meets the supply shortages. In fact, no, let's not do that. Let's get to a global news update. Let's get to Leanne Gerrans. Good morning, Leanne.
Anna, good morning and thank you. The UK government says it will consider EU proposals to ease Northern Ireland's trade issues seriously and constructively. Yesterday, the European Commission unveiled its plans, which would see a reduction of up to 80% in checks on some goods arriving from Great Britain. It would also see customs paperwork cut by half. Brexit Minister Lord Frost is optimistic about the state of the negotiations.
We need to find arrangements in Northern Ireland that work to support the Good Friday Agreement, and that means all its dimensions, east-west, north-south. We're asking everyone to be flexible, find compromises, look at things in a different way.
Meetings will take place in London later between the EU and the UK. Here in England, coronavirus infections are high and rising among children. Bloomberg's Pooja Kondia has more.
Prevalence of COVID-19 is growing amongst those aged 17 and younger. That's according to the REACT-1 study led by Imperial College London. The reproduction rate in this age group was 1.18, meaning that on average every 10 young people infected are passing it on to about 12 others. Coronavirus vaccines were rolled out to 12 to 15-year-olds last month, but take-up is slow, putting pressure on Boris Johnson's government. Ministers are renewing calls for young people to get vaccinated. In London, I'm Pooja Kondia, Bloomberg Daybreak Europe.
The Turkish lira has dropped to a record low against the dollar after President Recep Tayyip Erdogan fired 3 members of the central bank's rate-setting committee in a midnight decree. Bloomberg understands the changes rid the committee of members who disagreed with Erdogan's calls to continue cutting interest rates. That's despite high inflation. And the World Health Organization has proposed a new team to lead an investigation into the origins of the COVID-19 pandemic. More on that coming up. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Anna.
Thank you very much, Leanne. Now let's get on to that conversation where earnings and the supply crunch meet. The numbers out of TSMC. Let's dive into these numbers from the Taiwanese company and get to Bloomberg's Asia technology editor, Vila Heiskanen, who's with us this morning. Vila, good to speak to you. So TSMC reported another quarter of record sales and earnings. What's driving the growth?
It's more of the same really in the electronics and the chip industry. So demand is rising for everything from cars to computers to gaming consoles to smartphones, you name it. TSMC is one of the world's biggest makers of chips for all these machines, and they're of course benefiting from the rising demand. I mean, people are still largely in many regions stuck at their homes and they're spending money on electronics. And,
yeah, absolutely.
And this company's benefiting as a result.
Yeah, despite the fact that we're all supposed to have, as economies open up, decided to not spend on stuff, but to spend on going out instead. Maybe we're just spending on all of the above. The ongoing shortage of chips has caused problems for makers of everything from cars to smartphones. What is TSMC doing to alleviate the problem? How quickly do they plan to increase production?
Yeah, from TSMC's point of view, this isn't a major problem, of course, because they're boosting their earnings and sales, and they're doing well. The company is saying that they will spend more than $100 billion expanding capacity over the next few years, about 3 years. They confirmed today that they're adding a plant in Japan. They're also looking at Europe for more capacity gains, and they also want to sell more to car manufacturers. Cars, of course, have been one of the industries that's been most severely hit by the shortages.
They also spoke to investors at length today. What are the key takeaways from that conference call?
Well, the company really sees itself in an extremely strong position. I mean, they gave a forecast for the fourth quarter for margins and sales that beat expectations, and it's very focused on adding capacity globally, not just in its home region, but also in Japan and now Europe. It's also very bullish on margins, and that kind of signals that it has room to increase prices because of the shortages. So the key message here is that for chip makers, it's actually very good times at the moment.
Okay. Vila, thank you very much. Vila Heiskanen, Bloomberg's Asia technology editor. Thank you very much for joining us, bringing us the latest on what is an increasingly global story, of course, that chip shortage. Coming up on Bloomberg Daybreak Europe, Christian Muller-Glissman, Goldman Sachs Managing Director for Portfolio Strategy and Asset Allocation, joins us. No doubt we'll talk a little bit about the value versus growth debate. What's the Goldman view? And also think about the inflation narrative where we've reached on that journey. This is Bloomberg.
If knowledge is power, the Bloomberg Terminal is your power up, connecting you to the real-time financial news, data, and analytics that can take your workflow to the next level. Power up at Bloomberg.com/professional.
If you love them enough to listen to them practice the same song on tuba,
please be done.
Over and over and over and over and over, then surely you'll check nhtsa.gov/the right seat to make sure they're correctly buckled in the back seat.
Sounds good, honey.
Check today at nhtsa.gov/the right seat. Brought to you by the National Highway Traffic Safety Administration and the Ad Council.
The rise of robots is here. Everything you've seen on TV and in movies is true. We'll see you very soon.
That's right. Autonomous security robots already help keep the places you study, work, and visit safe using a unique combination of self-driving technology, robotics, and artificial intelligence. Learn more about the future of security at Knightscope.com. That's Knightscope with a K.
She said visit Knightscope.com now.
NJIT makes the workforce of the future, and Greg Sauter, a member of NJIT's Board of Overseers and president of engineering firm WGI, says NJIT graduates have the in-demand skills that drive today's tech-powered workplace.
Our world is moving to a place of connecting the physical with the digital. In the field of engineering and infrastructure, there's not a thing that we do that's not being changed by technology. We've gone from
ideas, negotiating trades, and forming an influential network that helps power global markets. Isn't it time you join them? Bloomberg.com/professional.
Join us today at 5 a.m. on Bloomberg Daybreak.
We'll preview earnings from Bank of America, Wells Fargo, Morgan Stanley, and Citigroup with Bloomberg's Shanali Bassett.
Plus more insight on inflation in the Producer Price Index.
Bloomberg Daybreak, weekday mornings at 5, followed by Bloomberg Surveillance at 7 on Bloomberg 1130, the Bloomberg Business app, and BloombergRadio.com. What's the difference between you and your competition?
What's your vision in this relationship?
We're guessing one thing is that you are better informed.
European Central Bank President Christine Lagarde had this to say.
Actually, we're not guessing.
The realism of this is tangible.
Up to the moment news.
Some of the biggest states could see most of the money.
Expert analysis.
Does that mean you're focusing on banks and other financials?
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
I spend a lot of time in the garage, but even more time in the rain, sleet, and mud. In 95, I helped tow your moving trailer. In 05, I helped you get out of a ditch. Yeah, I know I'm a bit rusty, and sadly in 09, it was sparks from me, your handy chains, dragging behind your truck that accidentally started a wildfire.
Sparks from dragging chains can start a wildfire. Spark a change, not a wildfire. Visit SmokeyBear.com. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Only you can prevent wildfires.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg's European headquarters in London, I'm Anna Edwards with this Bloomberg Radio Business Flash. European equity markets up by 0.9%, the FTSE 100 up by 0.7%, the CAC 40 and the Xetra DAX both up by around 0.7%, the IBEX and the FTSE MIB also making gains. So strength for European equity markets. US futures point to the upside as well, up by between 0.5% and 0.8% for the major indexes, as markets managed to put aside concerns around inflation, despite high inflation numbers coming out of Chinese factories and for US consumers, and the fact that we've got higher oil prices as well. All of that not putting investors off equities in today's session. We have the oil price at $84.05 on the Brent price. That is up by more than 1%, moving above that $84 a barrel mark. The yield on the US 10-year a little lower despite the concerns around inflation and higher interest rates. We saw a flattening of the curve, more movement to the upside in yields at the 2-year horizon during yesterday's session. So 1.53 is the yield on the US 10-year, 0.35 is the yield on the US 2-year. The dollar is a little weaker, down by 0.2% this morning on the Bloomberg Dollar Index. That's the Bloomberg Business Flash. Now here's Leanne Gerrans with more on what's going on around the world.
Anna, good morning and thank you. Germany's Olaf Scholz says an SPD-led government will drive forward an expansion in renewables and energy infrastructure investment. On a 2-day trip to Washington as Germany's finance minister, he expressed confidence that he'll form a government by Christmas. Now in Norway, a man's been held for questioning after arrows were fired at shoppers in a small Norwegian town last night. 5 people were killed and 2 others injured, including an off-duty police officer. The attack's been described as gruesome by the mayor of Kongsberg, near to the capital of Oslo. And finally, in Indonesia, the much-anticipated reopening of Bali is off to a slow start, with no international flights actually scheduled. As of today, fully vaccinated travellers from 19 countries, including China, India and France, can enter Bali. The UK is not on that list. Officials had closed the international airport in April last year to stop the coronavirus from spreading. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Anna.
Leanne, thank you very much. Now, coming up next, our colleagues in the US are getting ready for Bloomberg Daybreak. So let's check in with John Tucker and find out what is on his mind. John, we were worried about inflation. Now we've had lots of high inflation data. We don't seem to be worried about inflation anymore, and stocks make substantial gains here in Europe.
Well, you got to wonder what policymakers, if they're starting to rethink the idea this is temporary or whatever. Anyway, Simon,
the other T word that you're not supposed to say anymore, transitory. You have to put
well, why did you just say it then?
In Raphael
Anna?
Bostic's
Good
swear
Lord.
jar. I'm saving up.
Every few months we latch onto a new word. It used to be, what was it before? Transitory. Idiosyncratic, and
there we go. There've been many.
Back. So anyway, Simon French, the chief economist at Panmure Gordon, stops by to recap the Fed minutes and the latest inflation print. Well, you know, the bar was set pretty high for the bank earnings, at least when it comes to deal making. That was pretty profitable for J.P. Morgan Chase, and now the other banks. They're going to follow with earnings today. We get Citigroup, Bank of America, Morgan Stanley, Wells Fargo, Bloomberg Global Finance correspondent Shonali Basek. She's going to give us a preview. And also, we're being double-teamed here. Allison Williams of Bloomberg Intelligence will also pick apart Bank of America earnings, hopefully as they cross the tape this morning. And the Biden team heading to Glasgow for climate talks. They aren't bringing much to the table, unfortunately. Bloomberg government reporter Emily Wilkins is going to join us from the nation's capital to give us an idea what they are bringing to the table, if at all anything. Might be just a lot of talk there in Scotland. So join myself. And Karen Moscow's off today, so Nathan Hager and me will guide you through the morning this morning in the U.S.
Let's hope it is not all hot air, John, as the air hots up. Thank you very much, John Tucker. We'll be back with the rest of the Bloomberg Daybreak team stateside coming up shortly. Or if you're listening on London DAB Digital Radio, you will be listening to Bloomberg Surveillance, the early edition. Still time to get into one more conversation this hour. We're joined by Christian Muller-Glissman, Goldman Sachs Managing Director for Portfolio Strategy and Asset Allocation. He was one of the authors on Goldman's report signalling the end of the 60-40 strategy. Let's dive into that then, shall we? Christian, very good morning to you. So the idea behind 60-40 is you put some money in bonds and some money in stocks and they move in opposite directions, and one cushions you from sell-offs in the other. Do you not think that negative correlation stands still then?
Yeah, good morning. Listen, I think this has been a topic for the last few years. We actually wrote the first time in 2017 a report called The Balanced Bear, and really a series of papers since which focus on this problem. And you kind of hit the nail on the head there. I think the first big issue is that bonds cannot buffer equities that much anymore. And at the margin, that means that these type of portfolios just get riskier. It's kind of somewhat obvious. If bond yields are so low, there's just little how much they can decline. And I think the other big problem you have is that these really low bond yields, and particular low real yields, have spilled over to equity valuations in the sense that TINA, there is no alternative, has become such an important investor motivation in the last 5 to 6 years since we started with negative rates. People have been pushed towards equity. They've been pushed towards secular growth companies. They have gotten very expensive now. So both equities and bonds are expensive, but what's critical as well is that if you have a rate shock here, it's not just that bonds cannot buffer equities anymore. Equities are also likely to suffer more if bond yields are rising. So previously, bonds and equities were the perfect couple, whereas now you could say there's a lot of negative spillovers from both to each other, and that's what worries us.
So yeah, thinking about that spillover, when we see yields go higher and equities sell off as a result, is that more intense than it was before? Why do we focus so much on that relationship at this point?
Yeah, it is actually. I think what you might have noticed, for example, in the first quarter of this year, you remember there was this huge reflation optimism. You had essentially the markets realizing that the COVID recovery would come and the vaccines are working, and you had a lot of fiscal stimulus out of the U.S. But actually, the S&P 500 had a pretty volatile period. It did eventually break through and made new highs. But first of all, you noticed that it already was much more volatile. And you have to consider that this was a period with enormous growth optimism. And already then, equities were struggling a bit with higher rates. And then what you're seeing right now is also telling you that you're starting to run into trouble, because clearly now we're not dealing with reflation and reflation optimism. It's stagflation concerns. And there you got the double whammy. First of all, you have those higher rates and higher real yields, possibly, and we can discuss that because it depends a lot on what central banks can do. But I think at the same time, you don't have that growth optimism that can support equities. So in a simple dividend discount model, you can see the discount factor essentially going up with bond yields, but the cash flow growth isn't going up, which means you have like a double whammy. And I think that then means that you can have equities and bonds being negatively correlated, or equities suffering more with higher rates. And now you might say, why is it such a big deal? There is a lot of money, a lot of assets under management that are following strategies that rely on this kind of diversification benefit. And if you have large drawdowns for those kind of portfolios, they have to de-risk, in particular risk parity type strategies.
Okay, so they have to de-risk. So if we're selling it, does that mean we're selling everything, Christian? This sounds rather alarming. What can offer any kind of cushion?
Listen, it's the sad story. I mean, everything is kind of expensive, but as always in investing, just sitting in cash in the very long run doesn't offer you much return, and it's all relative. So I think at the margin, the key tilts we're doing is, first of all, you probably want to own a bit more equity than bonds. So I think you need to protect your equity overweight. What does that mean? You need to, first of all, within equities, avoid the rate-sensitive areas. So we've been much more focused on value than we've really been focused on for the whole last cycle, to be honest. Like banks and energy can be quite interesting into the fourth quarter because they are net beneficiaries of some of the stagflationary tendencies we are currently having. Right. But also you need to think about alternatives to, I guess, the kind of safety bucket. So you cannot just rely on treasuries.
Yeah. Does that mean selling tech then, given what you said there about avoiding the rate-sensitive stuff?
Certainly it means not putting all eggs in one basket, i.e. tech. I think it means that you diversify more broadly and you need to get more selective. I would 100% agree that tech will have a tougher cycle ahead than last cycle because valuations are much higher. Everything that is good quality tech is at the margin more expensive. We know why they're expensive. They can outgrow their valuations. So it's not to the point where I would say that you need to be short tech or worry about tech as long as you have the right companies and you're diversified. But it's going to be a tougher climb because these companies are not only expensive, they have very, very high profit margins. And we know that the regulatory, the governmental intervention risk is high because the government has been such an important stabilizer in the COVID-19 crisis. That will probably stay an important part of the economic landscape, government intervention.
Thank you so much. Really interesting conversation. Christian Müller-Glissman, thanks for joining us. Goldman Sachs Managing Director for Portfolio Strategy and Asset Allocation. Thanks very much to Christian for joining us to take us through all of that. European equity markets then just coming up to the end of the second hour of trading here in Europe, pointing to the upside. US futures point higher, coming up daybreak in the US, or Bloomberg Surveillance Early Edition here in Europe. This is Bloomberg.
Supply chain sustainability or supply chain performance? Why choose? With GEP, you can have both. GEP helps hundreds of Fortune 500 and Global 2000 enterprises build sustainable supply chains that are cleaner, greener, and deliver a distinct competitive advantage. That's great for the planet and great for your business. GEP, software, strategy, managed services.
How are financial services firms managing in this new reality? Claire Santaniello, Managing Director at BNY Mellon's Pershing, explains.
If the current times have taught us anything, it's the critical role that technology plays in client relationships. Global conditions have created a business imperative for firms to digitally transform the way they meet client needs and the way they work. Pershing's industry-leading technology enables you to adapt to the evolving ways